Good morning, everybody. It is Friday, June 14th, 8:47 a.m. And we're back to another Friday. It kind of came pretty quick in terms of Friday. That's what she said. Anyway, it is literally Friday. I came up with that on the spot. I promise I did not pre-plan that joke. That's just off the dome. You know what I'm talking about? Anyway, Friday, June 14th. We're here. Exciting day in the markets. Yesterday, we had Tesla's shareholder meeting. For those that were with me on the market close live stream, we did a good 4-hour stream covering the entire meeting. Lots of interesting stuff happened in that meeting. Lots of interesting things to talk about. The big thing is Elon got paid. And Elon got paid, which means, he's happy. I mean, he hopped on stage. He said, hot damn, I love you guys. I don't know how I could thank people in the right way for giving me $56 billion. Granted, he built the company, right? So I get it. He deserves the money, but it's also like at some level, if someone gives you 56 billion, you're going to be kind of happy. So Elon was happy. I thought there were some interesting questions asked at the shareholder meeting. We'll talk about that. Dan Ives put up a $350 price target on Tesla, raised it from 320, 315. So he raised it about $35. And his argument is that the compensation package now being checked takes off about $30 to $40 of hang that was on the stock, which I agree with. The hang has gone on the stock. The question is, do you agree with the broader implications of Elon getting paid means that the company increases in value, which I think in the long term we do. In the short term, we'll see what happens. So we got to talk about that. Gamestop news. Roaring Kitty now does not own 5 million shares as he did before. He owns 9 million. He exercised about 20% of his contracts, sold 80% of his call options. What does it mean by exercise? It means that you were actually allowed to buy your shares at the strike price at $20. And he probably sold the other 80% to be able to finance the exercising of those 20%. Now his average is not $21, it's $23. He is a top 4 shareholder of GameStop. So we'll talk about that more in a bit. Only BlackRock, Vanguard, and Ryan Cohen own more shares than Roaring Kitty. He owns about 2.5% of the company, which is just incredible. And so we're going to see how that plays out. And then on top of that, you got a market that's kind of selling off a little bit in the pre-markets. And Adobe, we'll talk about them. They had phenomenal earnings. They're up 15%. But the broader market is falling off just a little bit. And it makes sense. S&P 500 right here at 540. It was down at 539 a little bit ago, 0.36%. I mean, look, the markets in general have had a phenomenal month already going into June 4th. We're literally at the halfway mark of the month. It's incredible. Markets have done well. And we've got a lot of good inflation reports, so it makes sense that markets have done well. I think they're going to take a little bit of a breather, sell off a little bit. People take their profits going into Friday, but nothing too crazy given how well they've done so far this month. I have a new play I want to make as well, and we're going to explore that play in a little bit. It's not like the Rocket Lab play I made yesterday. For those that don't know, I bought some Rocket Lab just for fun, 25 shares. Matt finally saw it. He was like, Matt was like, how come I get no credit? I was like, Matt, you are literally the only reason I am buying Rocket Lab, so you get all the credit. So I have another play in my mind. It's going to be $1,000 bet, and if I get filled on the contracts, it is an options play. I want to get filled at a specific price. If I don't get filled at a specific price, it's not worth it. So I'll show you guys the play, and I'll go through my logic and why I want to make that play. And we'll see what happens. And we'll see what goes. And I tanked Rocket Labs. Yep, I bought it. And so Rocket Labs fell like 10 cents or whatever. I bought an unprofitable dilutive space company. So let's see. I actually, I'm thinking, 1,000 shares would be $5,000. I actually wouldn't mind getting the position up to 1,000 shares and just leaving it as a YOLO. It's just $5,000 I would never be able to touch. Probably for like the next, I would say 5 to 10 years, dude. Space is hard. And so if I do get it up to 1,000 shares, it would just be sitting there, hopefully one day becoming more. You should have bought GameStop if you wanted to have fun. That's true. Probably should have bought GameStop if I wanted to have fun. Okay, let's start off with Tesla. So Tesla had their shareholder meeting. I think the most important thing out of the shareholder meeting that we have to discuss is the implications on valuation that Elon was talking about. So Elon Musk says yesterday, Tesla is worth 25 trillion. He didn't give a timeline, but he says Tesla can be worth 25 trillion dollars based on 2 key assumptions. Number one, he says 30 trillion. Let's get our numbers right. 30 trillion market cap. Amit, what do you think about DNA? I don't like DNA. I went through the thesis on DNA, but insider selling is ridiculous, and they're not growing enough to justify the valuation. They're just not growing at that point. Also, I don't know if people noticed, they switched their revenue stream. Instead of doing this whole, they're the app store and everyone, and they take a piece of downstream equity in the companies that are built off their app store, quote unquote app store. Now they're doing AI as a service or data as a service. I don't like it. I really don't think they know what they're doing quite. I just don't have faith in them. I think there's plenty of other opportunities in the market. So not buying DNA. Okay. Elon says it is conceivable that Tesla achieves a $30 trillion market cap just based on Optimus and autonomy alone. Optimus will probably be $25 trillion market cap. FSD, $5 trillion. He also, when someone asked him about Cathie Wood's valuation, which is I'm happy, there were some very interesting questions in that meeting. We'll talk through some of the questions, but someone did say, hey, what do you think about Cathie Wood's model? He says, I agree, 8 trillion by 2029 is not crazy if we pull off FSD. And the big thing about Cathie's model, she doesn't talk about Optimus. And that's why I think Elon spent time talking about Optimus, because Cathie in her model, she's like, yeah, we don't even consider Optimus in any of these projections. And I think Elon was a little like, well, that's the part you really should care about. And so Elon spent a good amount of time talking about the economics of robots. He thinks there's a 1 billion robotic market in the next 10 years. He thinks it'll cost them maybe 10,000 to make it. They're going to be able to sell it wholesale for double that. The margins are going to be much better than cars. So he thinks there's a lot of momentum in the context of Optimus. And he really kind of sold the dream. He sold the dream. You should bring Steve on the pod. So I actually called Steve last night and we talked about this. Steve is a very emotional guy, the more I'm learning about Steve. So Steve, when I called him last night and we were talking about this Optimus thing, a couple of days ago, he was getting to the point where he was fed up with Elon. You know, he bought Tesla literally for Optimus. Like, you guys all know the reason he got into Tesla was for Optimus. And so all this like political stuff that's happening with Elon and Tesla, he was getting to the point where he's like, man, I'm just fucking tired of Tesla. Wow, speaking of Steve, he just texted me. Of course, you know, I told you guys, he texts me these random shit, Instagram reel, Twitter, YouTube, random stuff. He just texts me every day. He finds a way. He was getting really upset at what was going on with Tesla. And he was getting to the point where he was like really annoyed. And then you got Daddy Elon comes on stage and says, you know what? I think Optimus is worth 25 trillion. And Steve is like, last night, he's like, I think I need to buy more Tesla. He's like, I think I need to buy more Tesla. He's like, and then he starts going into, he's like, dude, like, I think Optimus is like the market potential for these. They're gonna do your dishes. And I'm like, Steve, weren't you about to like sell 2 days ago? He's like, yeah, but Optimus. So what Steve did is a caricature. That's the word we used yesterday. Is a caricature. I still can't say it right, but it's a metaphor for what I think shareholders felt yesterday, which is that they needed a dream. They just voted to give this guy $56 billion. This time last year at the annual shareholder meeting, the stock was 250. Now it's at 180, down 30%. So you just gave the dude 56 billion. You're down 30% on your shares. You know that you're going to get diluted by like 20 to 30 billion once these shares are printed for Elon. So at some level, you've got to believe in something. And I think Elon sold them a dream about Optimus. Now, he sold me the dream as well. You guys know I made the Figure investment, the private investment in the beginning of the year. Shout out to Derek. He was able to facilitate that investment for me. And if Optimus goes to 25 trillion, or in terms of market cap potential, that means Elon would be having to do $1 trillion in net income, not in revenue, in net income based on the robots. That's kind of how the math works out, which means Figure would have to be getting, I mean, it's only going to be Figure, Apptronic, Optimus. Like, there's not going to be that many players in the space because it's kind of like a winner takes all once you get to that scale. If Figure gets to that level as well, I mean, Figure is going to be worth at least 3, 4, 5 trillion, something, maybe 1/5 of Tesla's potential if they end up like being the number 2 in this game. So I'm sipping the Kool-Aid as well, dude. If Optimus goes to 25 trillion, the small amount of money I put into Figure at 2 billion valuation turns into a lot of money. I just don't know if that's going to happen anytime soon. Like, I feel like it's going to happen, but I don't know if it's going to happen soon. Elon did not give a timeline on that because Optimus is very hard to predict, right? And so I think we're going to have to see what happens, but shareholders definitely felt yesterday, if you're a Tesla shareholder with a heavy position in Tesla, I think you felt happy because you were like, well, wait a second. If this guy is right about what he's saying, my investment's going to go up 20, 30x over the coming years. And you're probably excited about that. Here's a couple clips of what Elon said at the meeting as well.
Just based on vehicle autonomy, we can 10x, 10x the value of the company. I believe that's what will happen. Yeah, no, it's just, what do you know? It's 4:20 p.m. I just noticed that. So, yeah.
As you can see, Elon was having a grand old time, right? Calling out the fact that it's 4:20 p.m. I mean, he's just having a great time. He doesn't really care about what anyone thinks. He just got paid. And now they're moved in Texas as well. So it's very hard for Elon to potentially not lose this money, right? Or to lose this money, given that the courts in Texas will likely be on his side. Here's him talking about Optimus as well.
Way crazier when you think about the Optimus robot, which is really a humanoid robot that is intended to, be able to do anything you want it to do. To be, it's your companion. It can be at your house. It can sort of babysit your kids. It could teach them. Be a teacher. It can do factory stuff. Like I think that the ultimate ratio of, say, how many super useful humanoid helper droids do you want? Like, who doesn't want a C-3PO? But a C-3PO plus R2-D2 plus plus. It would be pretty awesome. I think everyone in the world is going to want one, like literally everyone. And then there'll be obviously robots in industry making stuff, and so I mean I think the ratio of humanoid robots to humans will probably be at least 2 to 1, something like that. 1 to 1 for sure. So which means like somewhere on the order of 10 billion humanoid robots, maybe 20 or 30, and so then it's like, okay, well, let's say you kind of make, let's say the build rate is, I think the build rate will be probably something ultimately like 1 billion a year, humanoid robots, like actually. And if Tesla just has a 10% share of that, and it might be a lot more than 10%, and there's, who make like 100 million Optimus units a year. For reference, the auto industry is roughly 100 million vehicles per year. So that, sort of similar ballpark, at least within an order of magnitude. And I think we could make one for a cost of maybe at really high scale of about $10,000. It's smaller. It'll be less expensive than a car. So and I think if you sell it for $20,000 or something, this is at large scale volume. Tesla would basically make about $1 trillion of profit a year from that.
Again, not revenue, net income. So the multiple you put on that it turns out to be a larger company.
So, yeah.
And you see everyone clapping, everyone sipping the Kool-Aid. And I'm not saying it's bad to sip the Kool-Aid. In fact, if you're Elon, you have to give people Kool-Aid to sip. If you're Karp, you got to give Kool-Aid. If you're Satya Nadella, if you're a tech leader, you've got to get people to buy into some vision to buy the damn stock. And now it's just a question of if he can execute this over the next basically 2 decades.
If the price earnings multiple is, say, I don't know, 20 or 25, something like that, that would mean a $20 trillion market cap from Optimus alone. And probably 5 to 10 from autonomous vehicles. So, like, I think it's actually conceivable, it's within the realm of possibility for Tesla to achieve a valuation 10 times that of the most valuable company today.
Most valuable companies, Apple at $3 trillion, 10 times 3 is 30. Quick maths. Elon thinks Tesla can get to 30 trillion. Look, I mean, I know a lot of people hear that and they think it's crazy. As crazy as it is, I don't think we expected Nvidia to get to 2.5 trillion in like, what, 4 or 5 years, given what it's done. All of what he's saying also to me is bullish for Nvidia. If robots become a thing, all of those are built on GPUs, right? Those robots have to talk, they have to reason, they have to have LLMs. It's bullish for Nvidia. I mean, if Tesla gets to 25 trillion, I don't know if Nvidia surpasses that because Tesla just might make more raw net income. But Nvidia definitely does not stay at 2.5 trillion. By the way, Nvidia is at all-time highs right now as well, at 130. Nvidia goes up. So like this entire market sector increases. And we'll talk more about Nvidia in a bit. But it seems like there is a vision of the future. Either you agree that this grand vision of prosperity on the backs of AI and eventually AGI will manifest itself through something like FSD and robotics, which will be multi-trillion-dollar industries. Like if they become an industry, it's going to be trillions, multi-trillions. It's not going to be tens of billions. Like it's either that world or it doesn't happen. I don't think there's a middle ground. I think if robots become real, everyone buys them. Just like when phones become real, everyone buys. If autonomy becomes real, then it eventually scales, even if it takes time and it's not on Cathie Wood's timeline. Or it just doesn't happen. People don't want robots in their homes. Enterprises don't want robots in their factories. And FSD is a flop, and people want to drive their cars, and they don't really care about being driven in a self-car. You have to believe in these grandiose visions, especially if you're trying to look for something asymmetric, because at the end of the day, if you're not looking for 10, 20% on your money, if you're looking for 2,000% on your money, I mean, you've got to find a vision that is fundamentally differentiated from the rest of the world. And Elon is giving people that vision, and it's up to people if they want to buy into that vision or not. Martin says, just caring for the elderly puts Optimus demand off the charts. I agree. I mean, look, the reason I invested in Figure as well when Derek presented the opportunity to me and why Derek was so bullish about it. And Derek, again, he's been a VC for the better part of 3 decades. He's invested in amazing companies that became public, and he's also seen really horrible deals. He's put the most amount of money he's ever put into Figure in a VC deal ever, because he just sees the TAM. Like, Figure might not be the most perfect company, but the TAM is what you're going after. You don't have to be the most perfect company if you're going after a mega large TAM. And if that TAM is large and you're one of the top 5 to 10 players, and I think Figure is going to be one of the top 3 players, quite frankly, then you're going to win. So if Optimus is right, I'm sipping the Kool-Aid. But if you are a Tesla shareholder, I think that is kind of the core thesis to look at when it comes to Tesla. Overall, I thought it was a good meeting. It's a win for capitalism and democracy. Elon got paid. You guys know my opinion. He deserved to get paid. And now we're on to 8/8, August 8th. We're going to see what happens at that robotaxi event to get investors even more excited about what happens. What if Figure can't compete with Tesla manufacturing? Yeah, that's a real risk. Figure's only raised, $675 million, market cap's $2 billion for them. So they're going to either have to raise more money. They're going to have to figure out their production. I don't know what they're doing. We haven't, we'll see eventually when they put out an update in the coming months. But the last update we got from them was this public video of the robot like talking and doing the dishes and stuff like that. So, and that was like 3 months ago. So we'll see whenever we get an update what they're trying to do. But yeah, manufacturing is a big thing. Tesla absolutely has an advantage on any startup when it comes to manufacturing robots because they've got the supply chains built out. So, I mean, this is Tesla's market to win. I mean, if Tesla wins and Figure is a close second or third, I'd be very happy. I don't really think Figure is going to beat Tesla there if it becomes real, because the manufacturing is going to be too. Figure would have to have a robot so much better than Optimus that companies across the world want to buy Figure's robot over Tesla, and that gives them the revenue, the capital raise to be able to build out factories quicker than Tesla, which means Figure would just have to be so far ahead. And I don't know if that's the case, right? I mean, we're going to have to see how that plays out over the coming months. Okay, cool. So that's what we had for Tesla. Benny says you have to invest in these things before they become a reality. That's true. And so I don't blame any Tesla shareholders buying into what Elon says, because you got to believe in something. And if you want to have some type of, unique asymmetric advantage, you have to believe when everyone else doesn't believe. You just have to be right when everyone else doesn't believe. And if you are, then there's a big opportunity there. Okay, let's talk about Sofi. So some big news yesterday on Sofi. This was tough for Sofi shareholders. The Qatar Investment Authority, the QIA, they have liquidated 20 million shares of Sofi, 19.8 million shares. They published this last night, 19.8 million shares at a price of $6.78. They completely unloaded their price. That's why Sofi fell yesterday. Remember we saw that drop on Sofi and everyone was like, why did Sofi just really tank? It's because they sold. So their entire position has been completely liquidated. For those that don't know the Qatar Investment Authority's relationship with Sofi, they have a seat on the board, and they were in before the IPO. I think they got in 2019. So their shares probably are an average of $2, maybe a little bit less than that. So they probably made double or triple their money selling at 678. But that's a big sell, dude. That's a big sell. Now, granted, I don't think it messes up the thesis, or the thesis is the thesis. Qatar selling could be for a variety of reasons, right? They want to do something with it, whatever they want to do. The bearish case, you could make the argument that, Qatar sees that credit risk is going higher, defaults are potentially getting higher, delinquencies are getting higher, we're getting into a recession, we're not getting rate cuts, which is bad for liquidity, which is bad for lending. There's a myriad of bear cases you can make, not just for Sofi, but for a bank in general, as Sofi being one of the more profitable banks, but it's profitable now, but it's not as profitable as like JP Morgan, Bank of America, et cetera. So it's more risky and it's a little bit more speculative, which is why they might be scared of it. They want to allocate the capital somewhere else. The bull case is just like, look, they have a big return. They want to put the money into other areas. Maybe they're more excited about AI and stuff like that, and they don't want to hold this position anymore. They're up 2 or 3x. If you're up 2 or 3x on anything, you tend to take profits. And so they took some profits. But it is. I mean, I was shocked yesterday. 20 million shares just dumped by I think this is the fourth largest institution that holds. That's a lot. I think Kathy has, how many shares does Kathy have of SoFi? Kathy has a little bit less than that, but she's up there in the 10 million shares. Let me go to the fintech fund real quick. And let's see how much she has. But yeah, it was a bit of a big sell yesterday. The good thing is it's already done and it's not going to happen today. So it's priced in now and we can move on from it, but it is there. So of SoFi, Kathy has 4 million shares in the fintech fund. And I think she has more in the RKK fund. I think it's closer to like 10 million shares, if I'm not wrong. But that is one thing that happened with SoFi yesterday. And one thing for SoFi shareholders to think about. Again, I don't think it really matters long term, but it is one of the largest shareholders that are deciding to get out. In the full ARK ETF, she has 9 million shares. Okay, so 9 plus 4, 13 million, basically. 13 million shares. Yeah, that's what I thought. So she has 6 million less than the Qatar investment fund, but she did have a decent number of shares. Okay, cool. So that's what we had on SoFi and on Tesla. Okay, so I want to now talk about a new play that I'm thinking of making, and I want to get your guys' thoughts on it. I'm going to go through the thesis, and then we'll discuss what the play is. The play is a $1,000 bet. It's not a big bet, but it's a bet that should go up considerably if I'm right about it, and it is a derivatives bet in the global capital equity markets, which is what I want to show you guys right here. Okay, cool. So let me pull up. This is the chart I need to pull up to show this, and then we'll go from here. And really, I thought of this morning. I was looking at a lot of shit this morning, and I was like, I'm kind of getting jittery around this one. And if it's a $1,000 bet, I don't think it's that crazy. But this is okay. So real quick, this is not financial advice. This is my opinion, my thoughts. This is just me showing my due diligence on this. And if it goes through, I'll show you guys if it goes through. But you have to like understand this if you want to do it. If not, then you don't have to do it. So this is just my opinion on it. Okay. IWM, small caps. Good post right here by Jonah. IWM is getting no love. It was down another 1.6% of the pre-markets, but then it bounced off the July 2023 highs, as you can see on the chart below. For what it's worth, since July 31st of last year, QQQ, the NASDAQ, is up 24%, SPY up 18%, IWM is up 0%. In a market that is flaming hot and seems like it's only going up in terms of big tech, large tech, where is the alpha? And when you look around, it kind of feels like IWM is at least sitting there waiting for something to happen. The 10-year yield is down more than 50 basis points in the past 6 weeks. That's mainly because the CPI and PPI came in really good over the past literally the past 2 days. Yet IWM has gone almost nowhere during the same time frame, literally the same exact price, almost to the penny from when the 10-year topped out at 4.7.35 on April 25th. So what Jonah's saying there is that the 10-year was at 4.73. Now the 10-year is at 4.2. IWM, no change. Okay, so that's the first thing I wanted to share. Second thing I want to share on IWM is this chart right here in terms of earnings growth. Small caps are the least expensive in history on half of the different metrics that we're looking at. So if we're looking at this chart, small, mid, and large on trailing PE, small caps are -7% cheaper than mid caps and large caps. Forward PE, -1% cheaper. Price to book, 2% cheaper. Price to sales, 38% cheaper. On a PEG ratio, 9% cheaper. And on an enterprise value over free cash flow, they're -1% cheaper than large caps and mid caps. Then, if you look at the actual historical performance of small caps and large caps versus the average, it is also the lowest it's ever been, as you can see right here at the end of the chart, compared to the historical average. Small caps tend to be a little bit better than the historical average. They are performing the worst they've ever been. So I'm looking at where is the alpha in this broader market. The broader market seems to be giving Nvidia all the love in the world. And by the way, we'll talk about Nvidia. I think buying Nvidia at 130 isn't even that crazy because if it falls, it's the easiest buy the dip ever, given what we saw from Broadcom and Oracle. And we'll talk more about that. But buying Nvidia at 130 is a little tough if you don't have a real, long horizon because there could be volatility in the short term. Individual equities, you have to find equities that have catalysts, and those catalysts have to be based on future events given how this market has turned out. I don't think you can just buy, something and then just say, okay, well, if the market goes up, it goes up, because a lot of equities have gone up already. So you have to find something that has a catalyst if you're picking an individual stock. If you're looking at sector rotation and buckets of stocks that exist, IWM, the small caps, are the only ones that have not moved. They've just not moved the entire year. So what's the play? Oh, and two final things I'm saying. Rate cuts should help the financing of small caps. We haven't got the rate cut yet. I think that's what brings in the ability for small caps to finally get the financing they need, which will increase their share prices, increase their earnings growth, etc. And then they're performing at a 19% year-over-year growth in their historical earnings versus the S&P 500 companies at 8%. So there's a delta of 11% in earnings growth on the small caps. They're getting no love, though, because there's no rate cuts. When the rate cut comes, which given the CPI and PPI data we saw, that was really good, but IWM still didn't move. It leads me to believe that the market wants the rate cut before they give any momentum. So the play is TNA. TNA is a 3x leveraged fund on IWM. 70% of this fund is IWM. So IWM goes up 1%, TNA goes up theoretically 3%. My argument right here, and we look at the 5-year chart, this thing's down 38%, 1-year chart down 3%, year to date, this thing's down 8%. So this is leveraged. It's really important to understand if you do any play on this, like IWM experiences weakness, this thing will get really weak. It's kind of like TQQQ. If the NASDAQ goes down a lot, this like on the regular ETF, the TQQQ goes down a lot. Like if we just look at TQQQ, it's up probably 30% year to date or something? Yeah, 47%, because the NASDAQ is up 20% or whatever. So I'm looking at the options play here. If we go to trade options, we look at, you guys know I like to do the spread. We're going to go to June 2026. We're going to give us, January. We're going to give us 581 days. I'm looking at the $50 call and then selling the 55. So a $5 call on top of that. And that gets me, I want to do 20 of these contracts and I want to do them at 50 cents. That means I would pay $1,000 for this call debit spread for the potential to make $9,000. Now, will I get filled at 50 cents? I don't think so. I'm going to put in the order. We'll see what happens. As you can see, the bid and the ask is gigantic. So it's not like it's easy for this to get filled. I mean, I would have probably a better chance at doing $2,000, make $8,000 in profit, which would be a 4x, and this would probably get filled. But I want to see, can I get it at 0.50? This is one where I'm not being super greedy. I just want to see if it gets filled. I think there's a lot of volatility here. And if it does get filled, leaps often tend to be mispriced because they're so far out. Maybe I can spend $1,000. If IWM gets to 55, or which means if TNA gets to 55, which means IWM would have to get to, what's that, at 198 right now? Probably like 260-ish, 275-ish. Then this would be a 10x that I would be sitting on in the next couple of years. And we'll see. And we'll see what happens. Now, Drunken Miller is also in this play, not on TNA, but he has put in $664 million in IWM. So we're going to review that order. We're going to put it, submit. We'll see if it gets filled when the market opens, and we'll see what happens there. But this is another part of the thesis. Drunken Miller is deeply into this as well, right? And Drunken Miller, it's not like you can just blindly copy him, but he got the Nvidia bottom right. He got the Nvidia top wrong so far. Nvidia's up 40% since he sold, but Nvidia's just Nvidia, right? But he's made a lot of money there. His rotation out of large cap into companies like IWM or ETFs like IWM makes me feel that he also thinks there is a rotation coming at some. Does Nvidia go to 5 trillion this year? If it goes to $200, everyone's saying, oh, it goes to 200. That's a $5 trillion company. Like, if it goes to 200, then goodness, all right, it goes to 200. But at some level, I think the market's going to be looking for alpha outside of just Nvidia, and maybe that comes to small caps. Now, granted, this is risky, but that's why it's $1,000 play for me. This is not like I'm not loading the boat with $640 million like Druckenmiller. But for $1,000, the risk reward to me is obvious. I mean, if I get filled at that price, maybe a little bit higher than that. For if small caps benefit from sector rotation, my 1,000 goes to 10,000 within 2 years. That's not a horrible play at all. So to me, from an asymmetric opportunity, I don't see any stock that is asymmetric right now. It's hard for me to look at the stocks that are super asymmetric, but I do think small caps in general are asymmetric. And maybe that could be one of the reasons why it does well. Here's Bank of America's Jill Carey also giving a bull case for small caps just to get the institutional perspective. And then we'll move on from there.
Pulling back from yesterday's post-CPI gains, a cooler inflation report and potential rate cut on the horizon. Those are set to be a green light for a further broadening of the market rally. So is now the time to bet on small caps. Let's ask Jill Carey Hall of BofA Global Research. She is here with me at Post 9. Jill, it's good to see you. We've been waiting for the conditions, I guess, to be in place to see whether, in fact, small caps get a reprieve. Everyone can point to the underperformance versus large. It's been extreme for a while. What do you think it might take? And I guess how to approach small caps within a portfolio?
Right. Yeah. Thanks for having me. I mean, I think, a lot of the macro conditions have been favorable going into the year. We were positive on small caps for the fact that, GDP has been better than expected. We're seeing a manufacturing recovery. We're seeing an inflection in a lot of the cycle indicators. So that's all positive. But after the April inflation data came in hotter than expected, we kind of took a more tactically cautious stance on the Russell 2000. I talked to a lot of investors, and I think investors are kind of waiting for not just the Fed to be done hiking, but for those cuts to actually seem like a reality, given all of the rate sensitivity and refinancing risk in the Russell 2000. So, I think this inflation print was a step in the right direction, but it was really the first soft inflation print that we've seen this year. So,
and that's also why small caps haven't done well. The first 3 months of the year, inflation was rising. And so I think that's another argument pointing to the asymmetry. Like, if you all believe in the chat, inflation's coming down, the question becomes what benefits from that? And obviously the answer is everything benefits from that, but how much, right? Does Nvidia benefit to the tune of another 10% off that? Maybe, honestly, probably. But where are the baskets in the economy that really benefit off that if inflation comes down and we get a rate cut? If you believe in that narrative, which is kind of, the whole Tom Lee thesis, small caps, because inflation has risen for the past 3 months and we finally got it coming down this week, maybe there's the opportunity in small caps.
I think we want to see further evidence, and I think that's what the Fed wants to see as well, that inflation's actually easing. And I think we want to see also more confirmation just that the back-end loaded profits recovery that analysts are expecting for small caps actually looks like it's going to come to fruition.
Yes.
First quarter earnings was pretty good, but revisions have still been negative. And when you kind of look at how that's trended, the profits recovery earlier this year was expected to start a lot sooner than it's now been pushed out to. So by the end of the year, we see a very back-end loaded profits recovery. So I think those are sort of what could cause the broader Russell 2000 to do well. But in the meantime, we still see pockets of opportunity in small caps.
I was going to say the clarity on a rate cut or the reality of a rate cut, is it something that in an actual, tangible, practical way is going to matter a lot for, let's say, the typical small cap company? Or is it more about, a signal to investors that there's a little bit of a different risk reward setting up?
This is a good question. So basically saying, look, in reality, when we get a rate cut, is it just philosophical that small caps will react to that and the market reaction will be positive? Or will these companies genuinely benefit from lower rates, which will help their earnings, which will then obviously help their stock prices as well?
Well, I think, one rate cut may not necessarily matter as much as just the fact that rates are not going to stay high forever and that we could be going into an easing cycle, especially since, roughly half of debt on small cap balance sheets is either short term or floating rate. And, credit spreads are pretty narrow right now, but obviously if we see those widen and if rates stay high, that becomes more and more of a risk. So if we can see more confidence that we're going to be in a cutting cycle, I think that should, give investors a bit more confidence in terms of the profiles of small caps right now.
Something you start to hear now, and maybe it's just more of an indication of where sentiment is look, the Russell 2000, the entire market cap is smaller than 3 individual mega cap stocks. Why do you have to care? I guess from a market perspective, and maybe that's a good sign. People aren't looking as much. But you said you have ideas about where within small caps makes sense right now. Where can you add a little value?
Well, I think this is, a good environment to be selective, pick stocks or be active rather than passive. I think there's problems with both small and large cap indices. The large cap index has been very concentrated in a small number of stocks. The Russell 2000 has a very high proportion of, non-profitable stocks right now. So, we rather than owning the index, we would focus on, higher quality small cap stocks that are more cyclical, could benefit from some of the improving economic trends if that continues, but that don't have a lot of leverage or refinancing risk on their balance sheets or that aren't as rate sensitive, because I think those parts of small caps could still do well near term. And then if we get more confidence on some of the things that I mentioned, then that could be a better environment for the Russell overall.
Got it.
It's really interesting. The companies in the small cap as well, to give you guys an example of them, SMCI had a great year. MicroStrategy had a great year given how Bitcoin is done. By the way, MicroStrategy, I said yesterday they were doing 500 million of Bitcoin. They upped it to 700 million. So instead of 500, they're doing 700 million now. of convertible debt. And then Carvana is in there as well. Like Carvana is up 100% this year. MicroStrategy, I think, is up like 50%. SMCI is up like 100%. Like all these companies have done great, but the Russell has sucked. And it's because the Russell's filled a lot of other junk that balances out what those companies have done. But that junk will benefit when rates come down. Materially, they will benefit. And we saw on average their earnings are up 19% compared to the S&P 500 earnings. So I don't know, dude. I mean, like, it's something I've been thinking. I just haven't seen anything that's been stuck besides SoFi. I haven't seen anything this year, and Tesla, but again, Tesla did go all the way down and it recovered from 130 to 180. So there was a move to make money there. I haven't seen a stock that's been absolutely stuck this year while the entire market has done well, besides the small caps. And so it's kind of a logical thing. Rates come down, small caps do well, but it also could be small caps are just like so unprofitable and not exciting to the market because Nvidia sucking all the money, Apple sucking all the money, etc. That investors are willing to pay a 32 PE on Apple for 0% growth for the next 3 quarters. I mean, because it's Apple, right? And Apple gets the nod compared to something like a small cap. So, PayPal. Yeah. PayPal is just, I think PayPal's next earnings are going to crush, but I think the market really wants to see them crush before they give them any benefit of the doubt. PayPal down again, another 1% in the pre-market at 61. I mean, this thing is $1 away from getting below 60 again. So we'll see what happens with PayPal. But so PayPal, SoFi, companies like that haven't really moved. We're looking for a catalyst on them. There's not really any catalyst in sight for both of those companies. But small caps, I think there is a catalyst, which is the rate cut. And so we'll see what happens there. GameStop. Let's talk about GameStop. Also, a couple comments in the chat. Just want to address them real quick. Someone said biotechs are always asymmetric. Yes, but biotechs are very hard to predict which one's going to win. Like if you don't study XLB for a living, I think like you should probably stay out of biotechs. This comes from someone who put in a lot of money in biotechs in 2019. Because I was like, oh, this company's going to cure cancer. Dude, like it was the most typical retail investor shit ever. Yeah, it didn't work out, obviously, right? We lost some money there. So it's like biotechs, you really got to know what the hell you're doing. If you're really interested in biotech, I feel like ArcG and the genomics, that's like at least some way to get exposure. But biotechs is tough. And then someone else said, dude, why are you thinking of putting $1,000 into TNA when you have credit card debt? I have the cash to pay off the credit cards, guys. It's not that I need to borrow money to pay off the credit card debt. I pay it off on the 26th of every month. I was just making a point that when I went to California, I ran up the credit card because I had to do a lot of things. So it's not like we're investing without paying our credit card debt. I don't believe in that philosophically. You should probably pay off your credit card debt. You shouldn't pay the APR on your credit just to be able to invest. But we have the cash to pay it off. Again, the reason I use a credit card, and once I get Robinhood's credit card, which is rolling out, by the way, a lot of people messaged me yesterday saying they're getting it, is because I'd rather have my actual cash to invest. And my actual cash stays in Robinhood, and I don't move it. Because I try to find opportunities with it. And it's collecting 5%. So there's a reason, we keep the money in the investment account and then the credit cards we pay off every month. Okay, so okay, here's what we got. So we got Adobe next. Let's go to GameStop first, and we'll talk about Adobe. Let's go to GameStop first. Here we go. So GameStop. Roaring Kitty has 9 million shares. Roaring Kitty has 9 million shares now. So this was just incredible yesterday in terms of what happened. He's up $51 million on his GameStop right now. All right. So yesterday, Roaring Kitty has put out the super stonk update on Reddit. And on this Reddit update, he has showed that he now no longer has the 120,000 call options. Those are gone. Those 120,000 call options are completely liquidated. Whether he exercised or sold some of them. There's a lot of theories online about what he did. Maybe he sold some, maybe exercised some. I think it's 80-20 exercise versus sold. But he did increase his positioning by 9 million shares on GameStop, which is pretty damn incredible, dude. He now owns 2% of the company. He is the 4th largest shareholder behind Ryan Cohen. And as a result, he now has 9 million shares at a $23.41 average. He made $30 million yesterday. He's up $51 million in total. He also has $6 million in cash, as you can see right here. So the total value, $262 million, $6 million in cash, $268 million in his portfolio. He's up 24% on the shares. I thought this was just incredible. And the reason why I thought this was incredible to see, as Bsoft says, GME meeting moved to date on Monday. That's going to be exciting. Their meeting was over. It was bombarded with so much demand. Their servers crashed yesterday. So they moved the meeting to June 17th. So we'll cover that when it happens. But I don't know what his game plan is. I would love to know what people think in the chat for what his game plan is. He's long 9 million shares. He could probably buy another 500,000-ish shares with the money he has left. And he could theoretically go long, probably close to 10 million shares if he wanted to, if he has some extra cash. And there you go. He's he's now the fourth largest shareholder of the company. Then he says, where did he get that money from? I don't know, dude. I really don't know. But the point is he has that money. And so my question now is, what the hell is happening with GameStop? The fun fact here is that Ryan Cohen had about 9 million shares when he became the executive chairman back in May 2020, or when he first initiated his position. And it's oddly peculiar that now he has the same amount of shares that Ryan Cohen had, kind of almost like he's sending a message that he's doing something, or that he believes he's going to do something to change. AJ says if he doesn't sell before dilution, he's an idiot. I think GameStop's not going to do any more dilution. I could be wrong on that, but he already sold 120 million shares, or GameStop sold 120 million shares in the open market. So GameStop did the dilution. They raised almost $4 billion in cash. I don't think they're going to do more dilution. They just don't need to at this point, so it doesn't make any sense. And Roaring Kitty gave them the platform to be able to do the dilution, which I think was part of his strategy in the first place as well. So you've got GameStop having the cash on hand. They've got the passionate retail investor base. You got Roaring Kitty, who's long. He's not making money off of this move. All the money he's made off the options, he just dumped it right back into the stock. So I think he thinks this sucker's going to 100. Or I think he thinks there is a plan in place, whether it's buying Bitcoin or it's doing something on the balance sheet. I think he thinks there's something that's going to happen with GameStop right now, up a little bit in the pre-markets, that's going to create momentum. We got 2 minutes until the market opens. And if he's right about that, his 9 million shares, if it goes to $108, he becomes a billionaire. So GameStop would have to theoretically 3.2x. And he has no expiration now, right? It could 3.2x in the next 5 years, and he still is worth close to $1 billion. I mean, asking for a 3x from GameStop, I know it sounds crazy, but given the $4 billion they have in cash, given the passionate retail investor base, given the fact that we're about to get rate cuts to happen over the next couple months, maybe it's not that insane. And given the fact that hedge funds might want to continue shorting it because they believe that it's absolutely absurd, which, they're not crazy to believe that valuation is absurd, maybe the squeeze ends up happening. I don't think the squeeze potential is as strong as it was, back in 2021. But if it gets there, I mean, there's a shot. There's a real shot. Someone says, is he ever going to sell at this point? I don't think he wants to sell, dude. I think he's sending a message to the market saying, hey, we're going for this. He sounds like he wants a board seat. I agree. It sounds like he wants a board seat. Now, someone did float a thesis yesterday on Twitter. Derek Quick on Twitter. Shout out to him. He had a really compelling thesis around GameStop. And I thought it was really interesting. When does the market open? How many seconds do we have? We have 30 seconds. Okay. The thesis was GameStop becomes the next Berkshire. So they say, screw the GameStop business. They take the $4 billion in cash. They start investing in companies. They start making strategic bets, and it becomes a holding company for people who invest. So if you invest in GameStop, you are trusting Ryan Cohen to allocate your capital, just like if you invest in Berkshire, you're trusting Warren Buffett to allocate your capital. I know it's kind of crazy, but that would be way more exciting than in betting on a legacy video game store. And now that they have the cash to do that, maybe that's what the plan ends up being. And Roaring Kitty plays a big part in that transformation. June 14th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. We are live on the market open. GameStop opens $29.18 on the day. Slightly red / flat, 29.16, a little green right there. So we got GameStop opening up green on the day. Now it just turned red, and we're going to see how that continues to play out over the coming hours. Let's go to PayPal. PayPal is red by 0.38%. S&P down 0.3% on the day, still holding 540. Adobe, we'll talk about their earnings. They're up 16%. Pretty damn good earnings, good guidance. It obviously bounced from being down 20% year to date. Now I think it's up about 10% year to date. So Adobe's doing really well. We'll talk more about them in a bit. Palantir down a little bit. Palantir actually slipped below 23 in the pre-markets. Now Palantir is up 23.13. Tesla 185 up 1.43%. I think it ended at 182 yesterday. So that's up 1%. Rocket Lab is down 1%. GameStop's down 1.2%. Broadcom up another 0.66%. SMCI was actually up 9% yesterday. Now it's down 2.4%. Robinhood 23.38 up 0.34% on the day. Snowflake 126, that's up 0.34%. SoFi down 1%. Again, if you're just joining, the Qatar Investment Authority sold 19.8 million shares yesterday of SoFi at an average price of $6.78. Likely, honestly, selling it to retail. And so retail swallowed up those 20 million shares. SoFi now down 1.18% on the day. Nvidia, 129. Overnight trading, Nvidia hit 131, which is just incredible. $3.19 trillion market cap. Absolutely incredible for Nvidia. It's just not stopping. We'll talk more about Nvidia in a second, but it's just not stopping. And it doesn't look like it wants to stop. So that's what we got on Nvidia. Bitcoin, 67,000. Now, the inflows yesterday were the worst inflows we've seen on Bitcoin from the ETFs in a very long time. The inflows yesterday, 226 million were taking out of the ETFs. Only BlackRock was positive at adding 18 million. Fidelity sold 100 million. ARK sold 50 million. Bitwise sold 9 million. GBDC sold 61 million. So rough day for Bitcoin. I'm surprised it's still green, but it was a pretty tough day for Bitcoin. Robinhood 23.45 on the day. Let's go to the crypto companies. CleanSpark is down a little bit. CleanSpark had a good day yesterday at 17.95. Coinbase 247. Cypher is up 1.7%. MicroStrategy up 1.93%. Again, MicroStrategy not buying $500 million of Bitcoin. They're buying $700 million of Bitcoin. They updated today, so they will be buying more Bitcoin. Marathon, $20. Bitfarms, 289, up 2.84%. Ethereum falling below 3,800. Those ETH ETFs, it looks like it's going to take a couple weeks for them to officially be approved, but hopefully that's a catalyst for Ethereum. 3,500 right now on Ethereum, right at 1090. And then Bitcoin right here, 67,000 on the day. Mag 7 are all red besides Tesla. Look at that. Apple's down, Microsoft's down, Meta's down, Google's down, Amazon's down, Nvidia's down. Tesla's red. Well, Tesla's green. It was a little bit more green, but now Tesla at 183 on the day. So that's what we got going on right now. Yeah, VIX is up 7%. Now, this was really interesting. The VIX is up 7% on the day. I don't necessarily know why the VIX is up so much, but it is up. And so as you can see right here, VIX right here up 6.45%. I was trying to see this morning. I saw that in the pre-markets and I was wondering what was going on. A couple of reasons that could be for that is because U.S. import prices are down month over month. So import prices in the U.S. fell by 0.4% from the previous month in May of 2024, the first price decline of the year. To trim the 0.9% jump in April. It was against the market expectations of 0.1%, which is, it's relatively not that big of a deal. I don't know if that's enough to create volatility. I think also because the markets have just kind of mooned over the past week, again, S&P hitting 540, maybe there's just a lot more selling pressure because people want to take profits, which has created more volatility. GameStop right here up 2% on the day. Palantir 22.92 falling below 23 on the day, down 1.6%. I did react to Karp's speech yesterday in the market close. I'll upload that probably tomorrow. I'm going to upload my AIPCon takeaways later today. It was a hell of a speech. And for those that haven't watched it, I think you guys should definitely watch it and see what he had to say. But that is what happened yesterday with Palantir. Celsius, again, red on the day. Microsoft now red. Celsius at $62. Intel's a little green. Dell is down. Oracle's down. Starbucks is down. Costco's down, Lowe's is down, Home Depot's down. All of these are down like 0.3, 0.4%. They're not down substantially. I mean, like SLG is down 1%, but it was up 9% this week. So again, it's kind of just like people, I think, are taking profits. Enphase at 131. CleanSpark now is up 1.7%. IWM, 199. Again, small caps continue to struggle. They're down 1% on the day. Shopify's booming. Yeah, Shopify should be doing well. Shopify, 65.91. Look at that. Shopify up 2%. Not bad at all for Shopify. Bounced hard. I mean, Shopify is literally at the same price it was right before earnings. Oh, no. Shopify was at 68 or 70. It was touching 70, but it fell to 52. You got a hell of a bounce on that. Look at that. Fell to 56. It was at, where was the top? It was 79 right before earnings, not 65. So it was 79, fell all the way to 56. Nice 25% decline. And now it's made its way back up, back to that 65 level. And look, it wasn't the easiest dip to buy because obviously the valuation is up there, but it is like an exceptional company that they really don't have any competition besides Amazon in the e-commerce space. So investors willing to pay the premium. Path is up a little bit right now, 11.56, but it's down from 12.28 the other day. Where's SoFi? SoFi is down. SoFi, wow, down 1.83%, almost 2%. Yeah, I mean, look, when the Qataris sell, I don't know if that's the right plural of Qataris. I kept calling them the Saudis yesterday, but I think they're different than the Saudis. But when the rich people in the Middle East sell 20 million shares of your stock, yeah, it's gonna hit. I mean, it's definitely not going to be the easiest to absorb for shareholders. So that's a little tough thing for SoFi to deal with on the day. Don't you think Hood is a little bit overvalued at these levels? Not really. And the reason for that is, again, just market catalyst that exists. Robinhood, they sent out a couple of emails to me yesterday, which I'm assuming they're sending out to like 20 million people that are on their platform for this 1% deposit match. Their net deposits are going to explode this quarter, in my opinion, just given what they're doing with this 1% deposit match. And that's going to increase net interest revenue. That's going to increase their margin balances. That's also going to increase their ability to create transactional revenue. I mean, I was doing the math last night on Robinhood. I think we put up another $600 million quarter. The analysts are expecting 620 million. I don't know how the analysts get to 620 million, but when I was doing the math yesterday, I don't get to 620, and maybe I'm off on a couple numbers. I get to like 605, 610, which is still about 25% year-over-year growth. That's 2 quarters in a row of 600 million. And that's assuming crypto trading is actually only $85 million of revenue. Last quarter, it was about 130 million. So I'm assuming a decent 50 million delta there. We still put up $600 million. And net income should still be profitable. So I think that they're going to have a good quarter. And I think the gold subscribers are also going to surprise as well. A lot of people, just given what Steve Quirk said about how many people they're adding to that gold subscription. MicroStrategy right here, 15.15 right now. Adam says, Amit, look at the cash gear puts January for SoFi $7 strike. If SoFi goes below 6.5, that's a crazy play. Okay, so let's look at that. So SoFi $7 strike, sell put, and you said in January? That's a long dated put. January $7 put. Okay, so January 2025, sell a $7 put. Wow, yeah, that's not a bad premium. That's not a bad premium. You're getting $124 for every 700 you spend. I mean, that's not too bad. So that's what, 125 divided by 700. 17, that's 18% return. If you think SoFi is above $7 by January 2025, you can lock up $700 and make 18% on that money. And how many months is that from now? That's like 6 months, right? Yeah, basically 6 months. So 18, that's about 3% a month annualized, which is not crazy. That's not crazy at all. But again, it all depends on this thesis of like, is SoFi going to move? Like, is this thing ever going to move? And like, I don't think the Qatari selling is that big of a deal, but it's just more bad news on top of the stock. I do think Robinhood consolidated for 2 years at $7 to $8. Palantir consolidated for about 14 months from $7 to $9. I mean, SoFi has been in a consolidated range for a very, very long time at this point. I think it's coming up on basically 2 years if you look at this. So we bottomed out at 4 in December 2022. Yeah, in 6 months, it will be 2 years of being stuck from $4 to basically $7 with a couple of swings up to $11 in the meantime. At some point, that has to break out. Now, the problem is it's a bank, and the price to book, even at $7, is elevated than the price to book of companies like JP Morgan and Bank of America that are much more profitable banks. And the only argument I hear against that from the SoFi bulls is that the growth justifies a higher price to book. I am still confused, literally confused as an investor. Does higher growth on a bank justify a higher price to book, which historically trades at 0.75 to 1 on bank stocks? And if that's the case, then I don't think higher growth justifies a massive, a massive premium to the stock. And I could be wrong about that, but I'm trying to figure that out more in depth. Palantir right above 23, Tesla 183, GameStop 29.75. It's up 2.4%. Rocket Lab, of course, is down 3% now that we bought some Rocket Lab. Bitcoin 67,000. TSLL, that's up 0.3% on the day, given that Tesla's up. Apple 214. Baba 74, that's down 1.93%. ARM is up again. Celsius is flat. ARM is at 159. Where's Snowflake? Snowflake 126. That's a little bit green. And then Shopify right here, 65.87 on the day. Jay says, Amit, everyone keeps saying they trust Noto over at SoFi. We have watched the stock that can't get out of its own way, company that can't tell its story right, and company failing to create shareholder value. Well, the thing is, you could have said the same thing about Karp and Vlad last year. And so I get it, but like eventually there was a break. There was a breakout, right? Because something changed. And for Palantir, it was GAAP profitability. For Robinhood, it was crypto volumes, which gave the first dog whistle to the market of, hey, like if Robinhood has these many more volumes and crypto's, it was barely at like 30K at that point, Bitcoin, then this is a platform that we need to take seriously. And then they capitalized on that momentum with the gold event and all the shit they've done. I think SoFi needs to do the same, but there has to be that overarching catalyst that breaks them out. And GAAP profitability was not the catalyst because, I mean, they're a bank. They should be profitable, right? So S&P at 540. I don't know what the catalyst is going to be, but it's got to be something. I don't think Noto is a failed leader, But I do agree that that earnings call that he gave was just not exciting. And he has to, say whatever you want about Elon, you have to get people excited. You got to get people like they have to be excited. If they're not excited, why would they care? They have to feel like something matters. And if they feel like Optimus could be worth 30 trillion, they'll buy the stock. And if you trust Elon and it gets to, and Optimus starts executing, yeah, the market will react to that. By the way, Gary Black, who's historically not been bearish on Tesla, but he's definitely thought that Tesla projections from like the Uber Bulls, like the Farzads of the world, were stupid, right? He literally was like, this doesn't make any sense. I mean, this is what he tweets yesterday. Optimus, market demand for robots, 1 billion per year. Tesla captures 10% market share, 20,000 per robot, costs 10,000 per robot, 1 trillion in profits, 100 million times 10,000 each, 20 to 25 multiple, 20 to 25 trillion dollar value. Who am I to say it can't happen? Elon did it with EVs when skeptics said he couldn't. I mean, dude, if you know anything about Tesla, for Gary Black to say, well, who am I to say that Elon can't do it? This is a guy who has historically been so bearish against Elon's craziest expectations. I mean, he's really been upset with Tesla bulls like Farzad that are like, oh, they can sell 20 million cars by 2030. He's like, no, that's never going to happen. He's like, you're being irrational. I mean, my, have the turntables. You got Gary Black saying, well, yeah, it could go to 25 trillion. And maybe Gary's so underwater on the shares, he's like, shit, if Elon's pumping, I'm going to start pumping with him. We are not in New Jersey. We are pumping our own gas. That was a good one. That was a really good one. I think that's what Gary said yesterday. And if that's the case, maybe he's on the wheelhouse when it comes to getting Tesla to get some more momentum. Robinhood 23.39 on the day, up 0.34%. Shopify 66, Adobe 524. Okay, let's talk about Adobe. Oregon does that too? Really? Oregon has someone else pump your own gas? You're lying. I thought it was only New Jersey. Do you pump your gas in Oregon? Really? All gas stations in Oregon can now allow customers to pump their own gas, lifting a ban on subs. Okay, so wow, Oregon and New Jersey, you have someone else pump your gas. Wow, that's incredible. Shout out to Oregon. Okay, Adobe. Let's talk about Adobe. So Adobe had a good earnings, a really good earnings. Let me pull this up right here. Okay, so let's read a little bit from this. CEO, Adobe achieved record revenue of $5.31 billion, driven by strong growth across Creative Cloud, Document Cloud, and Experience Cloud. Our highly differentiated AI approach, that's the first thing they say in the press release, and innovative product delivery are attracting an expanding universe of customers and providing more value to existing users. Adobe delivered outstanding Q2 results, positioning us to raise our annual targets. $5.3 billion, they beat on revenue. EPS, $4.48. GAAP operating income, $1.89 billion, $2.24 billion non-GAAP operating income, and non-GAAP net income was $2.02 billion. GAAP income was about $1.5 billion. Cash flows, $1.94 billion. RPO, $17.8 billion. So remaining performance obligations, they have a lot of money left in the pipeline. And they bought 4.6 million shares of their stock, which was a good buy because Adobe was down 20% year to date. And Adobe obviously believed that they were undervalued. So look, I mean, they said guidance was going to be good. They said their total revenue is going stronger. I think they raised their EPS by like $1 for the end of the year, which is what the street really, really liked. And as a result of that, that made the street a lot more excited for what they would be able to do. Now, in terms of the AI arguments, I didn't listen to the earnings call, but it seems like Firefly, which is their AI model that allows people to be able to like type in anything and then get a result. It seems like that's doing well and that's driving more subscriptions. You have to believe, if you're an Adobe investor at like what, 250 billion in market cap, that they will continue to get people to use their AI models over other models, 236 right now, in order for it to win long term. And if you believe in that and you believe that's going to drive more subscriptions, then that's going to do well. Now, the important thing about Adobe doing well is it proves the SaaS AI kind of dying ecosystem that CRM showed us a couple of weeks ago. CRM right now up a little bit on this Adobe news as well. Maybe is not dead. I think that's also why Snowflake is up today. If Adobe is able to generate SaaS revenue based on AI and raise guidance, then maybe CRM was actually just a fluke this quarter. And maybe Snowflake is incredibly undervalued, right? And these companies are going to get premiums as AI continues to be stronger for these valuations. And so that's what we got going on right now. Adobe up 15%, GameStop, wow, up 5%. So GameStop having a little bit of momentum as we get started for the day. Broadcom up another 2%, 1708 on Broadcom. Nvidia's down a little bit, but Broadcom's up. Restoration Hardware, not the best earnings. They're down 14% on the day. They missed on revenue and they missed on EPS. Celsius down a little bit as well. But overall, Adobe right now having a really decent day. Dutch Bros as well, up 1.64% on the day. Cool. So that's what we got. Amit, I want to know what you think of PayPal. Is it a sell because of Apple? I don't think competition by Apple is a reason to sell off PayPal. I think those concerns are largely small. Robinhood right here, 23.49, up 0.75% of the day. But I do think PayPal needs stronger earnings growth. And based on what Alex Chris said at the previous conferences last week, they're going to get that earnings growth. The market, I guess, just wants to see it happen before they give them the premium. And we'll see how that plays out. Okay, cool. So now joining me, it's a Friday, so you know what we got to do on a Friday. We have our good friend that joins us to talk all about the options market and what's happening and some different plays that we're making. Mr. TJ the Wheel Deal.
What's going on, Amit? How are you?
What's up, man? It's been 2 weeks since I've been flying across the country, but now we're back. We got a lot to talk about.
I feel like I need to put a copy of my net worth in the back to be qualified to be on this channel.
Oh, get out of here.
CEOs, you're over there rubbing shoulders with Alex Carr. Dude, how tall is he? Like dispel the myth already, because it makes it look like he's like 7 foot tall in this photo that you guys took.
No, he's like 6'1". I'm just 5'7", dude. That's the only.
Yeah, I'm 5'7.5", but I claim 5'8", bro.
I claim 5'8", especially when I wear boots, dude. It's almost 5'9". Shit. That's why first date, my first dates have to be in the winter so I could wear the boots. You know what I'm saying? Like, you can't do any first dates in the summer. Like, we can't do that.
So anyway, Amit, today I think is going to be a really, really good day because this project has been really, really successful, and I cannot thank you enough, because all you've done is win, 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 no matter what. You know what I'm saying? Like, we don't have a loser on the books, Amit, aside from the 1,000 shares that I thought were a good idea with Path. So let's talk about the scoreboard, and then I want to ask you, what have you learned so far? Because there's some gimmies and gotchas with our experiment that are so obvious to me. I just want to make sure that they're obvious to you and the people that have been following the journey.
I agree. Let's do it. You can pull up the scoreboard.
If you allow me to present here.
Yeah, and real quick, for those that are new or who haven't seen this segment before, every Friday, TJ is allowing me to allocate about $500,000 of his overall portfolio by wheeling, cash secured puts, covered calls, etc. And we've done it for basically 2 months now. And so we're going to go through how much money we've made, premium we've got, how much money we haven't given back to the market, and what moves we will make today as well.
So that's total premiums collected, guys. Net premiums collected is 28,975, and we'll verify this on the actual account, but just to give you all a summary, if you will. So 28,975 open P&L on shares owned is down 1,400 on 1,000 shares of Path. That was my idea. Amit didn't have anything to do with this. Just full disclaimer. I was like, it's down 30%. It can only go up. Well, that wasn't true. So do not try to pick the bottom. You're probably not going to be very successful. So we're total net is 27,575. But then I took it a step further. Is it farther or further? I don't know. It doesn't matter.
Dude, TJ. Yesterday, I was going through my AIPCon performance and we were watching a little bit of it and I messed up at one part. But before I messed up, I was like, all right, guys, so good so far. And I said it with so much confidence. I was watching the stream back last night. I looked at the comments. People were like, you fucking idiot. It's so far so good. Not so good. Dude, I was like, okay, all right, guys, so good so far. And then I kept going. I had so much confidence. And I'm listening. I'm like, no one said so good so far.
Principle that would say, believe me, you. And I'm like, I think it might be believe you, me, but I hear you. But he was saying with so much conviction, I believed him.
Well, now I'm just going to keep saying so good so far. I'm not saying so far so good. I want to be different. So it's going to be so good so far. So, there you go.
So Hood has generated 13,265. Shop 74.45. TSOL is good for 6,000. HIMS was a cash grab that we did. We got 1250. NVDL was the 685, the earnings play, the ETF leverage on Nvidia. And then Path, we've at least collected 330 in the premium, but down 1,400 on the shares, just full transparency, right?
Right.
So here's the gimmies and the gotchas. The gimmies, it's great. 28,975. or 27,575 if you want to account for the shares that we're down on. But then now this is a game of now what? Because look at the open collateral, man. What's the open collateral at?
0. We don't have anything open collateral.
Goose
Holy crap!
Goose
Wait,
egg.
the 500 grand is like not even being used right now.
Unless you want to account for 13,000 that I paid for Pat. So yeah,
Okay.
I mean,
Wow. So hold on. So basically, you're saying
you didn't know this, right? Because you ghosted me on a couple of text messages. I got receipts of it.
Yeah, well, dude, the amount of texts I've been the past week. So yes, I definitely ghosted you on a couple of stuff. I probably missed a ton of screenshots.
No, it's because you were talking shit on Twitter that I was making moves with your money. So now this is my time to give back. I'm one of those guys. I'm petty as hell. No, what happened was Robinhood went up so quickly that we were like at 80% profit with 3 weeks left in the contract. We were only into this contract for like 7 or 8 days, so the math said to close. And that was a big portion of the capital.
I remember that. I think I responded to that. Yeah, I told you.
So we locked in the win.
Yeah, we were up 88%. Yeah, that was okay. So while I was in California and Robinhood was mooning, you closed out everything, and we made 27 grand on 500 grand. So how much is that? That's 27 divided by 500. We made 5.4% in about 2 months or 8 weeks, 2.5% per month. That's not bad at all.
Yeah, not bad. But now it is a game of now what? So now just for full transparency, let's go to Hood. And you guys can see, because at the end of the day, this thing's just addition and subtraction, guys. This game is very, very simple if you're willing to show the books. If you're not willing to show the books, well, then you can leave people to, they're just gonna always wonder, right? So we started this thing on April the 26th, Amit. We collected 920. So the way you read the scoreboard is if you see sell, that means that we collected money.
Right.
If you see buy, that means that we gave back premium.
Right.
So you're going to add the 920, the 360. We gave back 30. We gave back 132. We collected 940. We collected 295. We collected 1,060. We gave back 300. We sold 1,300. We gave back 280. This is all in premium. We collected 1,080. And then this is when we got jiggy with it. We got 94.20. We gave back 150. We gave back 1,100. And then we gave back 100. So you guys can see that the one that we did a couple of Fridays ago, that's the reason that we're so profitable on Robinhood. Because this has been the best position so far. But the issue now is we don't have anything. We don't own any Robinhood whatsoever. So now it's just like, okay, what do we do with all this buying power, bro? Because this isn't just in the mid 500K problem. Look at all this buying power over here. Like,
okay, and we did the same with Shopify. We made good money on Shopify.
Yeah,
we can go through that one too.
Yes, this happened, guys. Because my thing is I'm not a debater like Amit, but one thing that I do know that is if you give me facts and you give Amit facts, neither one of us is going to be able to argue with results.
Men lie, women lie, numbers don't. Right?
That's the reality, right? So here you're going to see that we collected 1,260. We gave back 260, so we locked in $1,000. We collected 590, collected 2,000. We gave back 215, collected 1,040, collected 2040. Rolled the position, collected 1,220 on it, gave back $80, gave back 220. Rolled the position, gave back 400, or we collected 400, then we gave back 330. Yep. So if you do all of that math, it checks out, dude. There's a lot more pluses than minuses.
All right, so let's take 500 grand and let's buy some call options on Nvidia for $200 expiring.
That's what I'm talking about.
You called me a pussy for the past 6 months or the past 6 weeks. Let's do some non-pussy shit and let's just YOLO. Let's do it.
But I did introduce you to, hey, let's go heavy on Robinhood because I could see the gleam in your eye that there was very, very high conviction.
Correct.
Yeah. And I was like, so why are we pussyfooting around with it? Let's go grab the bag. Because let's do it to where we're just talking. So here's the gimmies and gotchas guys are selling cash secured puts and covered calls. You know, like if you guys have followed my channel, you'll see like these are my rules to wheeling. Pick a stock that you want to own at a stock that you're comfortable owning that. So cash secured put, do it over and over again, rinse and repeat. When you own the shares, you sell covered calls, pick a strike price that you're comfortable selling these shares at, et cetera, et cetera, et cetera. But here's the thing: if you want to advance, that's Wheelers 101. Amit, I think you might be ready to go to Wheelers 201. It makes a lot more sense to pick a stock that you actually want to own right now.
Yeah.
In other words, the setup is already there to where, like, if you didn't know any better, your old self would just be buying shares and hoping for the best. Yes or no?
Correct.
Because we've all done it. I still do it in my 401k and in long-term investments in my BUL. I'm not looking at share prices. We're just DCAing into the market.
Right.
So the best setups, if you want to make more money, are high conviction stocks that happen to be at prices that you want to own them right here, right now, because now you can sell very aggressive cash secured puts, maximize your premium that way. There really isn't a gotcha if it dips to your level because you wanted to own those shares anyway, and then you can turn around and sell covered calls, and now you're getting a crap load of premium there, but you're also positioned for capital appreciation. So that's the three spokes of the wheel, right? The cash secured put premium, the covered call premium, the capital appreciation premium. Wheelers 101 is you're averse to owning shares.
Yeah.
You consider it a bad thing. And in actuality, you're not a wheeler. You're a cash put seller.
Correct.
You're a cash secured put seller.
Correct.
And that's cool. But your upside is only the premium that you received. We did not participate in any capital appreciation. You guys can call me a liar on the chat. Y'all called me a lot of things. Go ahead and throw liar on there too. And I have encouraged you to try to take ownership of Shopify because I thought that it was a pretty good level.
You have, and I said, no way, Jose. I don't want.
And we could have probably already gotten $5 or $6 on it. I screwed the pooch on Path, but we would have been right, hella right on Shopify.
You're right. You're absolutely right.
And then whenever you were over here trying to give me some bullshit mediocrity trade on the hoods and stuff, I kept trying to inch the bar up a little bit to make the premium worth our while to tie up the cash secured put money, right?
Right.
And that's why the returns started getting supersized, if you will.
Yeah, and I think
gotchas. We're not qualified for any more money right now. Like now we got to go find the next trade. So to me, if you're going to be a cash secured put seller, keep in mind all you have is a real fancy job. Because now you got to go work again. And I've texted you this thing. Now what? You know what I'm saying? Like this is a game of now what? So what have you learned? What do you like about selling cash secured puts? And do you see how there are some shortfalls there? And there's also the big risk to the downside. Because from a risk profile, guys, there is no difference between owning shares and selling the cash secured put. Yes, you can manage that cash secured put, but whenever you own the shares, you can sell covered calls as well, and that's hedging you to the downside as well. Limiting your upside theoretically on that initial contract without considering the roll. But I would rather own shares if they're in my price point. I like a happy medium. Like let's say it's 500 grand. I would like if we already owned $100,000-$200,000 worth of shares and we're playing those to the upside via covered calls, protected to the downside a little bit with the premium. And then also cash grabbing over here with cash secured puts, preferably on the same stocks, because then I introduce you to Wheelers 201 and 301, and that's running the covered strangle on the stock. That's going to be a lot more profitable.
Right. I agree. I think a couple things I took away over the past 6 weeks is number one, if you're getting introduced to wheeling, which I'm sure a lot of people are right now along with me, you're going to be scared. You're going to be hesitant because you don't want to lose money, right? And that's like a natural fear anyone has. I mean, think about how many Americans don't even invest $1 into the stock market because they think it's so risky. So if you're doing something like this where you put up collateral, you might get assigned. That's always scary. It's a fear that you have to eventually go get over. Number two.
Real quickly, can you put this comment on here? It's tax inefficient. You know what's tax inefficient is trading your fucking time for dollars and then giving the government 30% of the money. That's tax inefficient on your time and on your capital. We push some buttons here. Do I own some taxes? Yes. Whatever, dude. I mean, it wasn't that hard. I mean, I'm never going to complain about paying taxes on profits. You know what I'm saying?
I agree.
So I hear you. There's definitely like you own some shares for over a year. That becomes a little bit more capital efficient. That's why the majority of my portfolio is in share ownership.
And if you're in Massachusetts, you have to pay 50%. So it's kind of ridiculous. Second thing I learned is if you're going to wheel, you have to understand the macro economy, which is one thing I'm trying to get better at. Because, for example, I was hesitant on like Shopify at that $56, $57 range. But if I understood the macro a little better and I saw CPI and PPI was coming down, etc., and like I can make that hypothetical prediction, maybe I would have been wrong on that. But if I can make a realistic perspective, a thesis, prescribe what could happen. This is why Tom Lee is so famous.
Right.
Then you can make calls before they happen. And you could say, no, Shopify's bottomed. It's down 35%. The macro's not getting that much worse to the point where it'll go to $40. Let's take some damn ownership. Let's qualify for capital appreciation at $52, $56. It's down 30% after earnings. Let's ride this covered call premium and we can have share appreciation. So I think as a wheeler, you've got to understand the macro and the stock you're wheeling to figure out if you can take ownership of shares, and you can't be afraid once they get assigned at the end of the day.
The thing is for whatever reasons, like owning shares for most wheelers, it's considered like a bad thing. Like, oh my God, you're bag holding, you're this and that. So I'm like, so you're telling me that everybody that's riding this roller coaster on the share ownership of these shares, we're in the same boat. The only difference is I got paid a little bit of money to get into this position.
Right.
But we're both in the same position. If it's Nvidia, if it's Tesla, if it's TSLL, whatever the case may be, if we own those shares and we aren't doing anything, we're all in the same damn boat. Agreed. The only difference is we created a little bit of a cushion. I think we lost him. There we are. We created a little bit of a cushion via the cash secured put premium and the covered call premium. But obviously now we have a lot more to manage. Whereas if somebody who's just buy, holding, and hoping the way that we all are in our 401ks and things like that, there's not a whole lot to manage there, right? You're just kind of enjoying the ride. You're going to look up in 10 or 15 years, and more than likely you're going to be pretty happy with their results.
Agreed. Two things in the chat. Mark says, when is the hood data release? It was released on Tuesday. You can go to the market close from Tuesday and check out that release, or just go to my Twitter and scroll down. Number two, guys, we know SoFi is crashing right now. Again, if you're just joining, the Qatar Investment Authority sold 20 million shares of SoFi yesterday. So that's why it's down 5%. For those that are wondering why it's down.
Yeah, I want to see some shitty timing because I'm full transparency on this channel, right?
Let's do it.
I was live on this channel, and then Tevez joined, and this idiot right here, TJ the Wheel Deal. What a fucking tool. Oh, so this is what I did. I had this creative idea, Mitt. I had this creative idea to sell 500 cash secured puts yesterday at $650.
Oh boy.
And so fine. I picked up a cool $8,000 and I was like, woo, on the channel, roll the tape, it's there. I was excited when these things got filled. Now ask me how excited am I that it's already in the money, at the money, or slightly in the money 1 day later. You know, like, have you ever seen those memes? A few moments later, right?
Yeah. Well, to be fair, TJ, this is July 12th. I think SoFi is above $6.50 on July 12th.
I do too. So this is why I wanted to go here. I do too. So guess what?
Are you going to put my money into SoFi?
No, this is my money. So I'm like, well, if I liked it at 16 cents in credit, I should be loving it at 32 cents in credit. You follow me?
I mean, that's a cool 16 grand, dude.
So I'm going to tie up another 325 right here, right now.
Okay, so before you do it, can you walk through the logic real quick of why you're doing this for those that are wondering?
Because I'm already long the stock, so a lot of the studying goes out the window. When I say long the stock, I want to be in this stock for the next 3 to 5 to 10 years. So I'm not look, let me go look at the RSI. Let me go study the chart. Let me go, no, dude, I'm just going to go grab premium because I'm totally comfortable owning these shares at 650. My average is 792. 650 is already a lot better anyway. Right. This is a long-term play. I want to go grab this premium because if I go grab 30 cents or whatever they're offering me, my break even is like 620. I really think that I can make a strong argument. I'm not like a master debater like you, but I can make a strong argument that SoFi is pretty undervalued at $6.20.
Okay, before you do this, can you go to view all options on SoFi? Can you go to the option chain, basically? Can you go to sell put for January and go to $7?
I have several of these on already.
Oh, yeah, because there's an 18% premium there. Would it make more sense to do that?
Well, I've already got 700 of those. I've got 400 of them at 8. So I'm already quote unquote synthetically long or whatever creative terminology. I don't even know who came up with this shit. I've already got puts that are in the money on purpose because I want to indirectly participate in capital appreciation. So I've already got 700 of those at 7, and I've got 400 of those at 8. So I mean, I'm showing you guys the whole bag here.
Okay, so we can go back to the one you were gonna do, but yeah, 650 by July 12th. I mean, I don't know, dude. I feel like Qatar's out of it.
But that's the thing, Amit, is I don't care if it is or isn't.
Well, yeah,
I'm
that's true.
looking at this premium because I'm okay owning them. And if you want to do stress-free living, selling puts and calls, do it on a stock to where you don't even have to look at the scoreboard. You're not monitoring. In other words, I own this trade. This trade does not own me.
Right.
I don't care if it's below 650. Awesome, I'm gonna own shares. If it's above 650, I just made a pretty healthy premium for agreeing to get into this position.
Right.
So I'm very indifferent either way. And presumably, whenever you're selling a cash secure put or a covered call, you should be okay with whatever outcome. If you're not okay with whatever outcome, you're not selling the right option for you on the right on the right stock for you at the right strike at the right expiration. That is just the reality of the matter, guys.
No, you're right. You're right. 100%.
And there's nobody that can talk me out of this right now. You follow me? And I'm okay bag holding this thing if it happens. Like I push the buttons and I live with my results because I keep doing the homework on Sofi. And at some point, if Galileo delivers, or if they just still stay as a bank, but they keep growing 20% year over year, I'm going to challenge anybody in the chat, go find me another bank growing at those levels. Then maybe Sofi deserves a different multiple at some point. Because at the end of the day, 20% CAGR is 20% CAGR. I don't give a shit if your name is JP Morgan or Sofi at that point. If we want to brand them together as just a bank, because do you think that JP Morgan it's so damn big, it can't possibly grow 20% year over year? Stands to reason that a much smaller bank is able to do so, right? Because they're barely getting their feet.
I think the key takeaway from this is you know what you're doing here. I mean, on the stock that you care about, and no one else can. And that's you got to get to such a level of zen where you don't give a shit.
I really don't. This is like selling a put on Palantir, bro. I don't even look at this shit.
Agreed.
I'm just like, I'm only looking at my premium. That's all I'm looking at right now because I'm long the stock. And if you want to go sell premium on stock that you're long on, you are going to live a very stress-free life doing this thing. But if you just want to go cash grab on GME because Roaring Kitty's doing this thing, and then now you're bag holding, and now you're pissed off, the only person that you have to blame is yourself. Because you broke the main rule, which is don't sell cash secure puts on a stock that you're not okay owning for the next 3 to 5 years, because it might take you 3 to 5 years to manufacture that win.
All right, let's sell it on Sofi, and then I'm going to give you a couple other names.
So let me rock this right here. So you see, man, we've been talking, and it cost me a couple dollars in premium, guys. So 200 is the max that you can do on Robinhood whenever you're collecting more than 25 cents a share, just so you guys know. So I'm going to see if I can get at least 30 cents. Ooh, looks like I can. Maybe get 31. No, that ain't going to happen. Let's just try to rock it out with 30. So tying up 130 grand, they're going to pay me 6. A little under. There it is. So there's that. So if I go here, you guys could see that it was 500 contracts earlier, and now we're at 700. So then my average credit's going to change, right? Because I got 16 on the first batch of 500, and then I got 30 on the second batch at 200. And then you're going to see both of the trades right there. So 8 and 6, I got 14,000 collectively. So while I'm annotating the wheel tracker, Amit, you want to talk them through the ideas that you have for cash grabbing, because we still haven't touched your 500K, and this is what it's about for you.
Yeah. So I'll while you're updating that, I'll talk about a couple names. So what I'm thinking from a cash from a cash put perspective is companies we wouldn't mind being long, but also companies that we think are potentially undervalued right now. I think, guys, believe it or not, Snowflake is a candidate. Now we have to see the premiums on Snowflake. But the reason I'm saying Snowflake is a candidate is because just from a technical perspective, this thing is oversold in my opinion. Do I think long-term it is a great investment? No. But if we're writing a put for a month out, owning shares at $115 or $100 on Snowflake with a company doing close to $3 billion in revenue, I mean, that's just not something that I would be scared of owning. And if Snowflake actually is the worst company in the world, which I don't believe that's the case, then all right, we'll take the risk and mess up on that trade. But I think Snowflake is due for a bounce when they have a good earnings. Yes, they've had a lot of issues so far. If the premiums are decent, I think that's one that is reasonable to look at when it comes to Snowflake. Number 2 is Robinhood. Now, it's a green day, so maybe that's not the best day to sell puts on Robinhood. But again, the May metrics to me were substantial. They were phenomenal. I think it's going to keep going up. The only thing I was worried about was crypto volumes edging downwards, but I don't think that's the good thing is Robinhood's, as you can see, Bitcoin fell from 70 to 61. Robinhood's up from 21 to 23 because it is diverged from just being attached to Bitcoin because there's other parts of the business besides crypto. So I think selling puts at like 20 here, 21.5 is not the craziest idea in the world. And then outside of just selling puts, TJ, I'm also thinking of covered calls. I mean, ironically, we were talking about covered calls today. I was looking last night. I made a screener on Robinhood looking at stocks that I think have decent covered calls premiums. And I was looking at a bunch of different names where we might just want to buy 100 of the shares to see what ends up happening and what covered calls we can sell on top of them. One of them I was looking at was Snapchat. Now, Snapchat, not fully well-formed in the fundamentals. Quite frankly, I hate the fundamentals, but it has created a bit of a range since falling from 17 or falling from 30 last year. That's one of the names that doesn't have the worst premiums. Unity, I really don't like Unity, but from a covered call perspective, there's good premium there. And the thing is down 56%. So it's another question of like, how much more can it fall? And another one is Lyft that I was looking at, and Enovix. Enovix I really don't want to do because I think it's too risky. But Lyft is one that is also down 4% year to date that has decent premiums on the covered call side as well.
Awesome. So I actually talked to Tevis about Unity yesterday. He's got a pretty sizable position in Unity. And he said that they just got a new CEO, but fundamentally there's a lot of things wrong with the actual company.
Agreed.
The premiums are decent. I looked at them yesterday. Like, so whenever, instead of like just buying shares outright, the one thing that you could do is you could sell cash secure puts at the money.
Right. Right.
So you're maximizing the premium that you get, but you have a little bit of that protection that way we're not going so rogue, if you will. Because it's very unlikely that we're going to buy something and it's going to start shooting up. I mean, I already proved it with Path and just look at my portfolio. Very seldom does that happen where you're going to buy shares and they're going to start mooning on you. Unless you just get lucky, because that is definitely not a skill set I've mastered. But I have gotten lucky a couple times.
One other idea I want to run by you, and we should pull it up, the chart when you're ready, because I want to look at these, is what if we sell puts on Nvidia? I mean, the premiums should be high because people think Nvidia's run too much. If we get a sign, that's one where I'm like,
oh, it's Nvidia. Yeah.
It's fucking Nvidia. I mean, like we're either at the top of the cycle and we're dead wrong on this, which is possible, or
remember you brought it to my attention from the beginning, or it was Palo Alto Networks, similar crazy price points. But it was like, we got to be able to own 500 shares. Well, now we can because of the split, right?
Yeah,
so
and Nvidia
has changed the game.
We know what's happening with Nvidia. Like, at least for the next 2 to 3 quarters, I don't think we see a significant downturn. If anything, I think we see an acceleration. Just given.
So I have Snowflake pulled up. Let me pull up Nvidia because let's just go with the highest conviction first.
Yeah,
of anything in the stock market. We can agree that Nvidia is probably the highest conviction for everyone right now. I mean, this thing is just on fire, right? So this would be the equivalent of $1,300 a share. Keep that in mind, right? Because there was a 10-to-1 split, and this is where people get lost in the sauce. So at $1,300, we're not going to be like super excited about it if it hadn't split. So at 131, it's just more economical for us because of the amount of money that we're tying up. But the valuation is the exact same on Nvidia at these prices. So what are you thinking? I'm thinking maybe like 120-ish or just like spitballing. What are you thinking?
I want to see the option chain. I think 115 gets more exciting, but yeah, 120, 125s.
Well, keep in mind, we can always roll, right? We can always fix the trade.
Right.
This is just to get in one. You want to go 2 weeks out, or are you thinking a month? What do you think?
Let's do a month. Let's do a month.
Okay, just to get some accurate mode, dude. This is fun.
Look at these premiums, dude. Goodness gracious. Oh my God.
Yeah, but keep in mind though, it's for a month out though. So
yeah, but still, dude, 380 to lock up 126. I mean, or 1260. That's not bad.
And
Real quick, let me read a comment by
31
such.
Delta. This is textbook right here, like 30-31 Delta. That's kind of where people play whenever they sell cash secure puts.
Yeah, let me read a comment. TJ, let me just read a comment by Sachin in the chat. Sachin, good friend of the channel. Sachin, happy you're here. He says top of the cycle is marked by stagnant revenue, reduction in operating leverage, and increase in SG&A. OpenAI, this is a really good point. The information reported has doubled their revenue to 3.4 billion. This may be a bubble, but this is not the bubble's top. I agree. And ChatGPT 5 is not even out yet.
Right.
And Apple's Siri, which is going to give AI to the hundreds of millions of people, is not even out yet. All of that's
being trained that does podcast with you. I feel like I've seen that face on there.
Yeah, Sachin's been on. We got to get him on Palantir Weekly again. He's done Palantir Weekly.
Okay, yeah, he's a super smart guy, dude. I wouldn't want to be on a podcast with him. It makes me feel dumb. Yeah.
Well, Sachin, every people know Sachin from the channel. He does wheeling as well. I mean, he does plenty of wheeling. The other thing about Nvidia is that Blackwell revenue for their new chip. Jensen said that's happening this year as well. So it's just like, I do.
I don't think there's nothing to talk about. A minute. How many do you want to sell, bro? Like, you don't have to sell me on Nvidia. Like, I missed this whole boat, and I feel like these guys owe me a couple $100,000. You know what I'm saying? So I want to go get my money. But no, because I mean, my thing is again, I have a 25-25-50 rule. So whenever I feel like it's pretty frothy, so it's 25% of the total capital that I would like to allocate to the position. If it dips, then we would deploy the other 25%. And then if it really dips, then I would deploy the rest, the 50% that's left. So it's like take a pie, right? It's 100, it's 4 pieces, if you will. So right now it's like I'd be willing to devote 25% of total capital allocation for this position and hoping for a dip. Like I want this thing to go down so it gets more attractive for us, right? From a valuation perspective. But if it doesn't, well, I'm happy, grabbing what we can grab right now. 125 is good, dude. I mean, what is the actual?
Can we see 120? Can we see 120?
Yeah, but I don't think it's gonna be juicy enough, dude.
120 is what? 205. So 205 divided by 1200. That's not horrible. Hold on, let me see.
For a whole month though.
205 divided by 1200. That's 1.7. Okay, where's the 122?
Man, 125, bro. It's Nvidia, dude. What are you stressed out about? We can always roll this trade if we need to.
That's true. We were at 125 like 2 days ago. So I think it's if we have a little bit of a downturn, we're definitely seeing 125. That's the only reason.
I know, but again, you got to get out of this notion of owning shares is a bad thing. You know that cover calls pay money too if we own these shares, right? Like this is the exercise that I always do. Let's pretend we already own these shares and we were stuck and we were trying to sell these shares. Well, how much money are we getting for agreeing to sell them? Let's say we owned them at 130. Just say we got caught with the hand in the cookie jar right here, and we wanted to agree to sell these at 135. Look at the premium on that, $530. You know,
well, that's a good point. For Nvidia, people are willing to pay the call premium. So you're right. That's a hell of a point.
I mean, the premiums go both ways. You know what I'm saying? Like, again, I want to graduate you from just being a cash secured put seller and being okay owning these shares. I got an idea for you. Why don't we buy a couple hundred shares of Nvidia, sell some covered calls, and then strangle it by selling some cash secured puts? And now we're working on lowering our adjusted cost basis on both sides, but we're already qualified for capital appreciation. Because here's the thing. Why would we want to even participate in Nvidia right now unless we both agree that it still can go up and to the right from here?
That's fair. That's fair. No, you're right. You're right. You're right.
And again, at the end of the day, it's Nvidia. You know what I'm just saying, dude. Like, to me, I don't even stress out as much as you guys might think, because in my mind, forget about Neo. Neo's like the total Russian roulette gamble. Forget about that one. But aside from that, I have conviction in all of them. Forget about Pat too. I thought I could pick the bottom. I was wrong. So those two excluded. There's nothing in the portfolio that stresses me out right now. PayPal, I got like a $60 average, and I'm not that stressed out. Palantir got like a $14 average. I'm not stressed out. SoFi kind of sucks. It's $7.92, but it is what it is, right? So what do you think? What do you think about buying a couple hundred shares? That way we're like in Nvidia, because I feel like you're not really in until you own shares. So let's buy. We know it's not the best entry point, but who gives a shit? We're going to get a rebate right now of $5 or $6 or $4. So it's almost like we bought them at 126, 127.
Right.
And then we'll turn around and sell some cash secured puts, and we're trying to lower our adjusted cost basis. That's the game, right? You want to lower the adjusted cost basis to 0 eventually, but you're never going to start until you own some shares.
I agree. The only thing I would say is I don't like buying it at 131. I really don't. I'd rather sell the 125 put, but I'm not opposed to just getting into the game. But I don't like buying it.
But we're only talking about also buying 100 or 200 shares. So we're talking about an allocation of $13,000 to $26,000.
Yeah, that's fair. That's fair.
I'm just, you know what I'm saying? And you're in a different situation. You got $500,000 to work with. So you got to start operating like you have $500,000 to work with. And that's the reason that people with more capital tend to make more money, because they're not scared of money at the poker table.
Right.
Because this isn't your only $13,000.
Right.
You shouldn't be wheeling Nvidia. That's all that you have. Because then now it's like you have to be right.
Right.
We have to be right. We just want to get in the game. And that's why these institutionals run this game, because they have enough money to manufacture the win if the conviction is there.
Right.
You know, they don't have to be right. They just need to get in the game in order to be right. It's like you don't have to be great to start, but you're going to have to start to be great. You know what I'm saying? It's one of those things. So do you want to buy shares, or do you want to be aggressive with cash and puts? That's what it comes down to.
Let's buy 200. We got to pay $2 extra now. Now it's 132.
Money talking to you, man.
Every time we talk, it just go. We need to be talking forever. This thing just keeps going up.
So let's just go 200. You want to go 300? Can we go 300? This one's on me anyway. It's all good. I want to own Nvidia.
Yeah, let's do 300. Let's do it.
Yeah. We'll just do market order. Who gives a shit?
All right, 132. We're in.
I'll put that on there. I'll make Bill put it on the spreadsheet to make it legit later. So there's that. So then now what I do immediately is, to protect to the downside, is I sell covered call, because this is called the buy right strategy, if y'all want to use technical terms, because I know y'all are fans of synthetic longs and all this other silly shit here. I have no idea who comes up with these terms, by the way. But so what I
gotta
do,
be some type of financial influencer who makes them popular, you know?
Yeah, it could be. I don't know. I'm not smart enough to do that. I just try to make money. So anyway, you guys can see there that we are probably down on the shares. So now it's like, okay, we want to protect to the downside. So the way that you protect to the downside on a buy right strategy, when it's like, this is like itchy trigger finger type stuff. So the way that you erase that a little bit is we just turn around and sell a covered call immediately. That way we're kind of getting a rebate, if you will. So you want to go 2 weeks out on the covered call limit, or do you want to go 4 weeks out on the covered call? That way we match it up to the cash secured put, and then that officially becomes a covered strangle.
Yeah, let's do 4 weeks out. Yeah.
Okay, so 4 weeks out. So let's see what we can get. We bought them at like 132. Do you want to? Would you agree that 140 is higher than 132?
I think $8 on top of 300 shares is not bad. I agree.
So then we'll go here and we'll go, it's 3 contracts, right? 3 share. Yeah. So then we'll go, like, you think they'll do it in the middle? 380 maybe? I'm pretty
380, they might do
what is the open interest and stuff? I didn't look at any of that shit. See, that's not gonna happen.
Oh no, you forgot the dot. You forgot the dot.
Okay, that's not gonna happen, no.
Yeah, 380 would be.
That'd be real nice. Can we get 385? So we're getting a rebate of 1150, whatever. Dude, I'm going to fight over peanuts right now. So there it is.
So 1150. We spent how much? We spent 40 grand on the shares.
Yeah. So we're gonna go through the math here in a second.
That's 2.8%. Okay.
Refreshing the scoreboard. So essentially, what we did is we said, "Hey, we're a big fan of what's his name, Jensen Huang. Is that how you say his last name, or did I screw it up?
Jensen Huang.
Whatever, with the leather jacket guy." So we're a big fan of the leather jacket guy. He's got silky smooth gray hair. He's very sophisticated, very well spoken. And he says that he's got a chip that's going to be worth a shitload of money that isn't even out yet. So factor that into the book. So we got excited. We bought into the noise. We bought into the hype. And so we bought at the top at 132. So we were like, okay, we jumped the gun a little bit. So now we want to subtract 385 from the 132 in the form of a rebate for committing to sell these shares at 140 a month from now. So we got 1155 subtracted from the 39,637. So that's going to give us our adjusted cost basis on the total capital outlay,
which is about 128 essentially.
Yeah. So do you feel a little bit better about Nvidia at 128?
I do. And now we're about to sell some puts to make it even lower.
Yeah. So then now it's like, okay, well, we liked it at 132. It stands to reason that we should be loving it at like 125, right?
Right.
So let's agree to sell some cash secured puts at 125 for the same strike price. That way we're not having to monitor too many expiration dates.
Right.
And do you want to stick over here at 125?
Yep. Let's do that.
Because if we liked it at 132, we should be loving it at 125, right? And how many contracts do you want to go now? We bought 300 shares outright, so I'm thinking we could do 7 contracts.
I was literally about to say 7. Yeah, those full 1,000. Yep.
And let's see if we can just get a little bit more money, like fight a little bit, maybe fight for that. Well, it looks like we can do better than that. Maybe like 330, 329. Let's go there. Just trying to get these guys filled.
330. Yeah, they're giving us 330.
Well, we'll see, and they haven't given it to us yet. It looks like we're at the top of the thing right now. So we'll let that stew. And if it doesn't fill, we'll come back and we'll put 320 and we'll get it done. You know what I'm saying? Like, but let's give the market time to do their little Chinese auction over there. What else did you have? You said Snowflake was a contender, correct?
Yes. Let's look at Snowflake. Let's look at that one.
Well, I like that this is going down. So this is way better than Nvidia just from that perspective alone, because you want to start a position when it's getting hammered because you're going to get better prices. So talk to me a little bit about Snowflake. Is this the company that Warren Buffett was in from the beginning or no?
Dude, yeah, Buffett was in, Wall Street was in. I think it's a stupid company. I mean, like, I think it's a reasonable.
Now, do you say that because of your allegiance to Palantir, or is it really a stupid company objectively?
So objectively, no, it's not stupid because they're doing 2.6 billion in revenue. Non-objectively,
so there's a little Palantirism. But there's like Palantir. Are they kind of in a similar space or what?
Yeah, the reason I'm bringing this up is because I would not want to own Snowflake for the next 10 years. I don't think they have an AI moat. And that's not me. That's the Databricks CEO. Databricks is growing very well, who also said Snowflake is nothing, right? But they're growing. But their growth is deaccelerating. However, 124, I feel like a bounce to 150 is not crazy at all. So owning shares at 115, 120, after it's down 50% the past 5 years, I think another 40% this year. From a technical perspective, I think it's a cash grab. But if we did have to own it, it's not the worst thing. I mean, there's a company that does almost $3 billion a year. You know,
are they a profitable company or no?
So they're not GAAP profitable, but I mean, like, they could flip a switch and they'll become profitable. They're growing their revenues a lot. But the problem is the revenue growth is deaccelerating, which is why it's down, and the market doesn't think there's an AI moat to Snowflake, which I agree with the market as per the share price. There's not an AI moat.
Right.
I mean, like, if you gave me a gun to my head, I'd rather own 100 more contracts of Nvidia over Snowflake. But I want to see the premiums to see kind of where we're at.
Okay. Well, keep that in mind. So we could do. Can we do 100 contracts on Snowflake? No, that would be like $1 million, right?
Oh no, I wouldn't want. I would do like 5 max, 10. You know?
Well, we already have 10 technically. So we got Snowflake. You want to stick with the month out? Vince is asking why weeklies, monthlies, etc. It's really a preference. The math checks out that if you do weeklies, you'll make probably an extra 1 to 1.5% annualized.
Yeah,
so that's a lot of money, but it's also a lot more work. I prefer 30 to 45 days out, and I like to manage these trades 21 days out because I have found. And this is just watching Tasty Works videos or Tasty Trade, whatever they're called. Early on in my wheeling career, that first 50% of your premium is easier to realize than the second 50%.
correct.
If you're only dealing with the weekly, it's like, man, you really have to be more directionally right on that position because it's so easy to get underwater. Whereas here, it's like I can kind of cruise control, still be directionally wrong a little bit, but for whatever reasons with data decay and everything, I can still find myself up 50%, you know, in the first couple of weeks and not sweating anything.
Right.
And I like collecting the big chunks of premium because people look at percentages and all that, but I also look at big chunks of premium because at the end of the day, what's a realistic adjusted cost basis on Nvidia for us? Is I would like for the goal to be to try to get to $100.
Yeah.
Because then it's like, okay, now we have a little wiggle room. Because right now we don't have a margin of safety, dude. We are literally, we're like the dumb people in the market right now, but we're trying
dumb money right now. Yeah.
Yeah. I mean, so let's talk about the Snowflake, man. So what are you thinking? The same thing? You want to be over here?
Yeah, let's look at. Oh, the premiums suck. Kinda.
Do they? Do they have
Hold on.
120? I feel like that's going to be about.
Oh no,
50.
120 is decent. Hold on, 246. That's like 2%. 246. Yeah, 2%.
So 24% annualized.
No, 125 is a lot better. Obviously,
Yeah, you're at the money.
you're at the money, right? I thought the premiums would get closer to 3.5%. That's when I was really be like, all right, let's pull the trigger there. 2%. I don't know, dude.
So this, I think, is the third Friday. They tend to be a little bit more elevated. So if you go July the 19th, 35 days out, that pays 330. Is that a little bit better?
That would give us 2.7. Yeah, it's not horrible. I think what 5 contracts of that is not crazy. Like $1,500. If we own Snowflake at 120, either look, so we got to be comfortable with we're dead wrong on the thesis on Snowflake and this thing's going below 100.
Yeah, but hasn't Chris, I mean, not to piggyback off of other people's research, but I do it all the time. I mean, I confess my sins, right? I like using smart people and making money off their brain. That's why I do YouTube.
I think
I've learned a lot more from smarter people than I'll ever learn from myself. And I think Chris Patel is very bullish on this company, so he's had to do some homework on it.
Yeah, but just like you said, I have a Palantir bias. Chris has an anti-Palantir bias. I think Chris is wrong on his bull thesis. I've been public about that.
So then why did Warren Buffett like him so much?
Dude, no,
somebody who's better than all of us combined.
No, Warren Buffett got in at IPO prices. He pumped his, like, he got in. Just Warren Buffett has not invested in anything technological for the past 50 years outside of Apple. So a big database software SaaS company is just like a throwaway for him. It was just like, oh, he could get in real quick and then get it. You know, it's like it wasn't a real investment at all. I disagree with Chris on the thesis. I think though that it's technically sold off. That's why I think the cash grab here is not crazy. But I disagree with Chris that like Snowflake's the next big data company.
So if we go 10 contracts at 340. What does that look like? We're tying up 120, dude. That's not like the worst thing in the world right there.
It's not. I mean, look,
about 25% a year, just eyeballing it.
I think we do it, dude, because I think it's going to be similar to Adobe. Adobe was down 30% a year to date, and then they pumped after a good earnings. I think Snowflake has nowhere to go but up. Like, could it go down? Yeah, but it would really. I mean, the market would really have to disrespect them doing almost $3 billion in revenue to say, you know, fuck Snowflake. So I think it's not.
Well, let's send it and see what happens. There it is. That was quick. That means there's good liquidity there and intro. That did not. We could have probably got an extra penny or two.
Yeah.
Interesting. Okay, cool. So we got 2 plays that I'm really excited about. So now let's go back to Nvidia. Let's go back to them. And how do you feel now? Because it's one thing to put the play on, and then once you see it on the scoreboard, it kind of makes you feel it a little bit differently.
Did we get filled on Nvidia? I think we got filled.
Yeah, no, we did. Yeah, we did.
Okay, so no, I feel good. I think both stocks, Nvidia, I love, and Snowflake's oversold. I think they're not horrible plays at all. And if we have to own them, it's not the worst thing in the world.
So here's the thing. Let's talk now. Let's do a little teaching segment, guys. And let's talk about the coverage strangle. It's an absolute mathematical certainty that either this cash secured put or covered call is going to be 100% right. It's a mathematical certainty.
Right.
But then you also have a probability that both of them are going to be right. But it's a mathematical certainty that you have to win on one of them. You can't mathematically lose on both of these at the same time.
So let me do some math. If we're saying Nvidia is above 125 but below 140, then if it's like 130, for example, we win.
That's the Goldilocks scenario.
So there's $15 we could be at in that spread for us to win and collect the premium, keep our shares, and not have to buy new shares. That's why this is such an interesting strategy, right? Because you give yourself this Goldilocks zone essentially to be in.
Correct. You created a spread, right? If you will. But worst case, or what's bad, this is what could be perceived bad. Nvidia tanks to 100. But for us, it's actually a good thing, Amit, because this is only 25% of the capital that I want to allocate to this position.
Right.
So if it goes to 100, then I would want to allocate another 25%. And then if it were to go down to like 70, then I'm like, okay, let's go get the other 50% in there. And now we have a full position on Nvidia. So what I'm trying to demonstrate to you guys is there's a strategy on the amount of capital that you want to allocate based on where the underlying is when you first get involved with it. That's why some positions look a lot bigger, a lot faster, is because they were just at better prices, so to speak, when I got in. Because at the end of the day, you know, price matters too. You know, your entry point matters as well. And so just keep in mind, dude, we want to, or at least I want to allocate. So that was, how much is that total to
40 grand we put in Nvidia. So we put in 160 today out of the 500.
Yeah. So I would like that to be about a $500,000 position all by itself.
And if Nvidia goes to 100, the covered call premium we got also helps us, because obviously the shares don't get called away at 140. That helps reduce the cost.
Right.
Yeah.
So then just to take the teaching segment further, if Nvidia tanks or it stays at like 126, which is nice. We won the cash secured put. We realized all of that money. We realized all of the cover call money. But then now we're going to have a collective adjusted cost basis. So let me pull up Nvidia, because this is a game of math, right? So let's pull up Nvidia here, because it's going to be on the scoreboard already. And this is all the math with Nvidia. So we bought the shares for 40 grand, and then we've already brought in about $3,500 in premium. So we're in these things for about 36.5.
Yeah.
So what is our adjusted cost basis? Can you actually
121.
So that's our cost basis when you add both of these premiums?
Yep.
Dude, I like it for several reasons, because at 121 it's a lot more compelling. And two, if Nvidia tanks, I already know, worst case in the back of my mind, as long as I'm selling covered calls above 121, I'm still mathematically okay. So I want to keep bringing in as much money as I can on the covered call side of things.
Right. So even if your brokerage says, hey, TJ, you're losing 10, 15% in your own, which is important for psychology, right? In your head, you need to know, no, I'm not, Mr. Brokerage. You're being stupid. I actually know what I'm down. And that helps you.
Well, it's being down on the ticker.
Right.
Are we down on the shares? Absolutely, dude. If it's below 132.12, make no mistake about it, you're down on the shares. The numbers, they don't lie either on the brokerage.
Right.
But we're, quote unquote, manipulating the cost basis by taking into account premiums that we've received on this said ticker.
Right.
This is just our math so that we'll know, okay, we're just treating Nvidia like a little business called credits and debits. And we know how many credits we received and how many debits we received. That way, if things get tough and we have to make a tough decision to potentially sell a covered call below our cost basis of 132, we know how low we can go so that we stay out of harm's way if Nvidia were to skyrocket back up and now our covered call is in trouble.
Right.
Because you don't want to be buying high and selling low. That's not a good recipe.
Yeah.
So anyway, are you guys learning anything today, Amit? I feel like you're having some aha moments here today.
This was good, dude. So I've heard about the strangle thing for a while, but I'm happy we did this example because it taught me a lot about adjusted cost basis. It taught me a lot about how to create a spread, essentially a zone in which you theoretically want the stock to be in. And it also taught me that we got to own some shares sometimes, right?
Can you address Sticky Monkey here? He's got a very, very cogent point right here. What shit did I just say cogent on TV? So check it out. No, the other one, the Bollinger Band. Yeah.
Okay, this one. Yeah.
Yeah, that's really, really ideal. It just to go through those exercises on this thing is like there's only so much time that we have to work with. But dude, your Bollinger Band, I call it the electric fence of the stock. Like, have you ever seen animals with an electric fence and they hit it and it's like, they don't want to do it because it hurts them, right? So these stocks try to stay inside this Bollinger Band. Very, very seldom do they go outside this Bollinger Band. And I like to sell cash secured puts when it's at the bottom of the Bollinger Band because I'm maximizing my premium, but there's a big level of support right there as well. And then whenever on the covered call side, when it's on the top end of the Bollinger Band, you're maximizing your premium, but you also have a nice level of resistance there because there's an electric fence on that side. There's an electric fence on this side, so to speak, and it just helps you out. So these are technical stuff. Really, really good point. Appreciate you, Sticky.
And you believe every time before you sell a cash curve put, you should always look at those bands to kind of see what the ranges look like, essentially.
Yes, correct. Unless fundamentally you're just totally sold on the company, and at the end of the day, I'm a fundamentalist. I'm not a technical person.
Yeah.
Because I think the technicals are really good at telling you when it rained. They're not necessarily that good at telling you when it's going to rain.
Right.
They're lagging indicators for the most part. So it's just one of those things. But that's just me. And again, it's Nvidia, bro. It's Nvidia. Like just give the audience real quickly, because you probably know these numbers. These guys are growing faster than like small companies like Sofi. You know what I'm saying? But they're billions and billions and billions of dollars. I mean, this shit is, I've never seen it in the stock market.
I've never seen it either, which is why I'm comfortable with NVIDIA as well. Let me re-explain everything. It gives me a chance to re-explain this. I'm still a bit lost on the strangle, Bruni says. So strangle is, you take a stock, what we did with NVIDIA, we bought 300 shares. We sold covered calls on that stock at 140, meaning if NVIDIA gets to 140, we have to sell our 300 shares with a $10 gain or an $8 gain because we bought at 132. But we received a premium for selling those covered calls. A covered call requires 100 shares of collateral. We sold 3 of them. And we got some premium for that. Then we sold cash accrued puts, which is the second side of the strangle, at 125. If NVIDIA is above 125 by July 12th, we get to keep the premium that we got paid for selling those puts and not have to buy another 700 shares because we sold 7 of them. If it is at 124.99, we have to buy those 700 shares, or we can just end up rolling the position. Based on the premium we got from the covered call side and the cash accrued put side, we got 3,500. We bought the shares for 40,000.
So Gail Thomas does a recap on our thing, but Gail Thomas needs to be the accountant.
Gail Thomas needs to be the accountant. So we spent 36.5 minus the 3,500. Basically, we have a break even at 123 and adjusted cost basis of 121, which is not bad at all.
Yeah,
not bad at all. Gail was writing notes while we were doing this. Is a shout out to you, Gail. That was awesome.
I need to send them my wheel tracker and pay them a weekly salary to update that. Damn, I hate the wheel tracker, bro. I hate doing the accounting of it.
So 2 things. Number 1, if you guys want the wheel tracker, email amit@dailypoundtier.com. I sent out like 20 of them last week. So it'll help you get started in your journey of wheeling. It's totally free from us, thanks to TJ. So I'll send you that. Number 2, I got to give a shout out to TJ. He's been doing what he's been doing in the stream today, talking knowledge. But TJ's YouTube officially now has 100 people live coming to his streams in the morning, and I want to give a shout out to him because he's been doing this for like 2 years, getting that up, building that community.
1,000 lives later.
Well, dude, most people would give up. Most people would not try. I mean, it's a fucking hard thing to figure out. And so how do you feel? I just want to ask you, you've got your community and they're rocking with you. How do you feel about that?
Dude, I love it because, dude, like I recognize so many of the names. And then now there's like newer folks that I'm entering into a virtual relationship with. And it's just really cool because it's like you legit are building a community.
Yeah.
And dude, it's like people will talk shit about me, and like my rent squad, bro, like they will like, dude, it's like I have like the army of 300 that they defend TJ the wheel deal, bro. And it's like the friends that like defend your name when you're not there. Like, dude, I feel like some of my rent squatters are like better friends than my real life friends. It's crazy. Dude, like Garcia, like I met him at your your party in Vegas.
Yeah.
I mean, dude, like he's a legit friend, bro. Like if that dude needs anything, he knows he can pick up the fucking phone. And if it's in my ability to help him, I'm going to help him.
Yeah. Yeah.
And it's just, so that's the kind of shit that YouTube does, bro. And it's like, I'm not on Google anymore because Google is doing some crazy shit with their AI. And I was like, I just can't do that stuff no more. But I'm just saying, dude, it does amazing things, because Google owns YouTube. So I'm
I want to ask you this question. So let me set it up, and then I want to ask you guys something. How do you feel about some of the trolls that you may be getting as you get bigger? So, like for example, today, let me give you a basic example. In the morning, I'm like, hey guys, I'm thinking of putting $1,000 into like this new call debit spread on TNA, which is leveraged on IWM. And someone's like, hey, man, don't you have like $3,000 of credit card debt? Shouldn't you pay that off? And it's kind of just like, well, obviously, I'm going to pay off the credit card debt. We're not investing with money that I should be using to pay off the credit card debt, but we pay that off on a certain date, and the money that's in Robinhood that stays in Robinhood, that's investing money, right? So very obvious dichotomy. Then a bunch of comments later, they're like, this guy's investing and he hasn't paid off his credit. You know, it's just like there's so many people that they just want to throw a little spike at you because they I don't know what dopamine they get off that, but it makes them feel better about their life. That happens exponentially as you grow because there's more people in the world that are sad and they'll find some stupid angle to come at you, even if it's ridiculous and it's false and it's filled with lies. You're experiencing that for sure. Who is this guy? He doesn't know what the fuck he's talking about. What is he doing? Why does he have all this money? Blah, blah, blah. How are you mentally dealing with that as well?
I have a wife that's been wealthy her whole life. So I have a wife that's 40 years old that's been dealing with this shit for 35 years since she can remember, right? And she says that this just comes with the territory, dude. Like the people that are at different levels economically, they always want to draw assumptions on people that are at other levels economically. And it's always because this isn't her terminology, because my wife is very politically correct and a super nice person. I'm not.
She's a sweet person. I met her. She's a very sweet person.
Yeah. But I mean, using my words, thinking like I feel like what my wife maybe wants to say, but would never say is like, broke people are always trying to tell rich people what to do with their money. You know what I'm saying? And it's just like, so be careful who you heed advice from. And sometimes people might be angry. They might be having a bad day. That might not even, their little comments might not even be indicative of who they are.
Yeah.
Because sometimes we're having bad days and we're doing lives and we might come across as somebody that we really aren't. We just might have been a little off that day.
Yeah.
So I give people passes, dude, because I go back and I look at the comments and I see that some people are like nicer to me some days and other days they're not, because at the end of the day, we all have personalities. We all have emotions. I have no idea. Maybe they're angry at their mom, their dog, their cat, whatever, their wife, whatever the case may be. And it's just like, maybe I said something that rubbed them the wrong way that day, and that's okay.
Yeah.
It's just, so I try to just, I'm going to sell puts, I'm going to sell calls, I'm going to collect premium, and I'm going to try to build the community. The people that are going to rock with me are going to rock with me. And if I'm ever in a situation to help someone out, I'm going to do my best to help them out and just try to put out the positive vibes, dude. And I feel like the more positive vibes that you put out, the more positive vibes are going to return. You're going to find it's like a boomerang effect.
Yeah.
Man,
I
try
agree.
to check out the noise, dude, because there's just people that are angry, bro, because we don't know what's going on. Dude, inflation's a real thing for some people. They might have a hard time making their ends meet, whatever the case may be. I know that we're all watching the financial channel right now, but that doesn't mean that everybody has it together financially.
Right.
They might be trying to get it together financially, and that they have a lot of stress amid, because I've been there, dude. I have dealt with evictions. I've dealt with foreclosures. I've dealt with repossessions. I wasn't born into a bunch of money. I had to figure out my way. So I know what it's like to be stressed out. It affects your attitude when you're stressed out financially. So I don't know what's going on with these avatars on the screen, so to speak, right? With these folks on the screen. So I try to be lenient when it comes to that as well. But that's why I always have my email there, dude. And I do my best to respond to the emails, because I get a bunch of emails, some hate, some love, some in the middle. And I try to address all of them accordingly.
I also think one thing you're really good at that I think I've naturally done, but I have fun with it, is like making fun of yourself, dude. Like you do this all the time.
I don't take myself that seriously, bro. I'm nobody from nowhere.
you just like, at the end of the day, we're guys on YouTube trying to figure out, how to provide some entertainment, but also some information. And if I make a joke that's like a stupid joke and people are like, admit that was a horrible joke, I gotta laugh at myself for making that horrible joke versus like, oh my God, this person said it's a horrible joke. Because if you can't have fun with the parasocial relationship you have with an audience, like the streams get boring, you know? And so you got to be able to have fun not to yourself.
Mark, TJ's so apparent. He occasionally show account number. Bro, one time I showed him my damn password. How you're like sharing and you don't realize that you're sharing. And I had to like go in there and freaking reset passwords and shit. And now I'm trying to remember this damn password. I'm like one of those simple people. I use the same shit for everything because I want to keep life simple.
Yeah.
And I was like, God dang it, I can't believe I did something so stupid. But yeah, dude,
all right.
I don't know. But dude, I appreciate you, man, because you're the one that encouraged me to go live, because I was trying to get my watch time when I was first trying to get monetized and stuff. And you're like, go live. That's the cheat code.
I agree. Everyone make sure to subscribe, TJ. And it's a cheat code because forget the algorithm. It builds like those 100 people, they fuck with you. You know what I'm saying?
Yeah.
And if you have people that fuck with you, like the growth will come, but you got to really develop that relationship no matter what. All right, we got to do word of the day before I let you go, TJ. Word of the day. So, word of the day. Guys, I'll be live back for market close, 3:45. Venerable.
Venerable.
Commanding respect because of great age or impressive dignity. Well, TJ, your option trading skills are very venerable to me, given you showed us how to trade options. Can you say Massachusetts, TJ?
Massachusetts.
Okay, so it's not just me. You don't say it as perfect as everyone else says it as well. I say
Massachusetts.
okay.
So
Now
why
that
is there a T there? Why that's why cause it's not spelled that way. So I say Massachusetts, but I think it's Massachusetts.
it's if I naturally say it, it's Massachusetts, and like that last part of it, the S and the H, is I just like I can't do it.
But keep in mind, dude, I said church for about 30 years of my life. Okay, and now it's church. And then I have a real hard time with children. So y'all have kids, motherfuckers. You know what I'm saying?
Why'd you say church?
It's because I'm a Mexican, dude. So we have the CH thing that it's like we could say shit like it's going out of style. You know what I'm saying? But you throw the CH in there, we get all confused. So
at least you have an excuse. You have the Mexican excuse. I have zero excuse for why I say it, but I'm just weird.
But man, I appreciate all of you guys, man. The love, hate, whatever, it's all indifferent. It's all the same to me, man. At the end of the day, we're all people and we're all equal. At the end of the day, we're all equal and we're just trying to figure it out.
I love it. All right, Nvidia and Snowflake, we're on the board. Now we got to pay attention to these guys. And we still got 300 grand left to allocate. So
got to find some trades, my man. Got to find some trades.
All right. Thank you, TJ. I will see you next week and we'll keep in touch.
Take care, my man. Y'all have a good weekend.
See ya. Bye-bye. All right, guys. I'll be back at 3:45. Quick look at the markets before we end out. I thought that was a good session with TJ. Covered the strangle in general, covered calls, cash cure puts. Good stuff going through all of them. SoFi is getting hit, dude. SoFi is getting hit. The premiums on these puts, I'm not going to lie, they look incredibly exciting. I mean, $7 put for January is paying you 18% right now. I don't know if I'm going to sell it, but it looks exciting, dude. If you think SoFi is above $7 by January 2025, it's not a bad put to sell. You will have to tie up your capital for the next 7 months, but that is something that's happening today, given SoFi is down 5%. Again, the reason SoFi is down is because Qatar sold 20 million shares. Shopify 67, Adobe up 14%, Palantir 23.28. Palantir is now green on the day. Robin is slightly red on the day, 23.12. Down 0.82%. Bitcoin's trying to get to 67,000. QQQ 477. Rest of the market relatively flat or red, but nothing too red. S&P down about 0.25% on the day. All right, guys, good stuff. I'll be back 3:45. Let's end out this week. Let's see what happens, and we'll keep going from there. Also, before 3:45, probably at 12:30, I'm coming out with another video, my takeaways from Palantir's AIPCon. So in about an hour and a half, it's already uploaded, it's scheduled. That'll be out, and I'll talk for about 20 minutes on everything I took away from AIPCon. All right, that's it. Thank you, guys. See you at 3:45. If I don't see you today, see you guys on Monday, and Palantir Weekly will still be tonight as well, 11. So we'll see you guys for Palantir Weekly. Bye, everyone. Have a good one.